So for the last 3 months, I've been working on a cryptocurrency course. In the beginning, I was selling it online for $50, but I decided, you know what, this should be common knowledge. Everyone should know about the basics of cryptocurrency and how to make money off of the crypto craze. So I decided to release the entire version of the cryptocurrency course for you guys to learn from. Please keep in mind, I've spent countless hours and several months working on this. So if you feel like you learned something from this course, please give this video a like, a comment, maybe share it to one of your friends. Thank you, and I hope you guys enjoy. Hey guys, congratulations and welcome to the Extreme Traders Insider Program. My name is Kevin O, and I'm super excited in helping you guys guide through this course because there's no better time in history where you can have the opportunity to turn your investment portfolio into a retirement fund. For some people, it's the opportunity to turn $500 into $2,000. For others, it's being able to turn $10,000 into $100,000. Personally, I was able to turn $30,000 into $3.3 million. Yeah, you heard it right. That's over 10,000% returns, and in less than 6 months trading cryptocurrency. This course has a lot of important information, like going through the basics of setting up your cryptocurrency wallet, choosing which exchanges to trade your cryptocurrency on. But the most important takeaway are the proven strategies and mindsets that have helped traders make 50, 500, even 1000% returns consistently. Right after this video, go straight into the next lesson by clicking on the module on the left side of your screen. I'll see you guys there. Hello everyone, welcome to the first lesson in this module. You are already on your way to start making big cryptocurrency gains. Before I start the first video lesson though, I want to make sure you know how to navigate through this module. So this is going to be an outline on the very important topics I will be covering. The first video lesson will be on having a great mindset when it comes to trading cryptocurrency. The second lesson will be on what cryptocurrency is and how it's been performing in these past few years. The third video lesson will be on Bitcoins versus altcoins. What are the differences between Bitcoins and altcoins? What is a better form of investment for you? The fourth video lesson will be on whether or not crypto is secure. I will be recounting past cryptocurrency scandals, hacks, and scams, as well as ways you can protect your own crypto. Number 5, as part of the resources as provided to you in this course, you'll have a very important list of crypto terminology that you should definitely familiarize yourself with. In lesson number 6, I will be covering the very important tools and resources you will need for trading crypto. And then finally, in the last video lesson of this module, I will be going over the tips and strategies that successful crypto traders have used to make big gains in the cryptocurrency market. So please see the left hand side of your screen where you can click on the next lesson. And in this next lesson, I will be explaining the 5 pillars of having a great mindset when it comes to crypto trading. So this lesson is going to be on mindset. Before we get started with the basics, I cannot emphasize how important it is to have the right mindset when you're trading cryptocurrency. I've seen people lose their life savings trading crypto. And personally, even though I made a lot of money from crypto, there were times when I entered a trade or got too greedy. But the most important thing was that I learned from my mistakes. Remember, the purpose of this course is to prepare you guys so you can start making 50, maybe 500, even 1000% gains. Not properly implementing these mindsets and strategies is the #1 reason for failure. So the first important thing you have to remember, and when it comes to mindset, is that you should not FOMO. So what does FOMO mean? FOMO means fear of missing out. The worst thing you can do is FOMO into a position that is unfavorable. A position where you're buying at the top. I've seen it time and time again. People always wonder, what if I put X amount of money into this crypto coin? After a coin has gone up 50 or 100%, they keep thinking, what if I had put some money in there? Oh no, I missed out on a 500% price hike. You have to understand that missing the train on a coin is completely okay. When it comes to the cryptocurrency market, there will always be another opportunity for you to make money. Instead of kicking yourself for missing out on an opportunity, you should be actively looking for other coins that will rise up. What I noticed, having 4 years of trading experience almost every day looking at the charts, what you think mentally is the right time to enter a trade is usually not the best time. I mean, you can tell crypto and trading in general is just completely unpredictable. Just check out this chart on the 5-minute time frame, where every candle you see represents 5 minutes. It just keeps going up and down and up and down and up and down. If you start buying where it starts going up, like here for instance, you're just going to get burned. And maybe you decide to short over here because you see there's a huge drop off. It's just going to rise back up. It's just going to do the opposite of where you think it is going to go. That's why having important mindsets and strategies, as well as the ability to look at technical indicators, is so important when it comes to trading. So the second very important thing you have to remember about having a good mindset is to be familiar with taking risks. Going into a trade is like jumping into a pool. Honestly, that's the best way I can describe it. Whenever I take a big position, I personally always get this little jolt or sinking feeling in my heart. Usually it's a very exciting feeling, like how I would imagine bungee jumping. You should familiarize yourself with the feeling of taking a trade and taking the risk. This way you would be one step closer into turning your positions into profit. There is no big profit without big risk. Now let's move on to the number 3 most important rule of having a great mindset when it comes to trading crypto. Before even taking a position or a trade, you need to have a game plan. You should consider things like, how long are you going to hold the trade for? What your stop loss price would be? What are your profit taking levels? What part of the position are you going to hold, and what part of it are you going to sell when it reaches a certain price point? Are you going to average down when the price drops, and how much? You should always have a game plan and stick with it. This way you wouldn't fall in the trap of trading emotionally. So moving on, the 4th thing you should do when it comes to mindset is to learn from your mistakes. Whenever you enter and exit a trade, there's always a takeaway. There's always a lesson to be learned from that trade. Just start getting used to telling yourself, okay, next time I'm going to look at this. Next time I'm going to look at the support or resistance levels. Next time I'm going to pay attention to the VWAP or look at the volume. There are so many lessons to be learned from trading. So the last and probably the most important thing about having a good mindset when it comes to trading is that you should not trade emotionally. The worst thing you can do is to be emotionally tied to a trade. When it comes to cryptocurrency, that's even worse because there's always a new hype. I've seen it so many times from my students, and I have been guilty of this myself. The absolute one thing you should avoid is revenge trading. Say for example, you entered a trade and got into a coin at the wrong price, and then it falls. Then you sell because you're afraid. Then it shoots up and you get excited and you enter the position again, only to see it fall again. You're going to keep entering bad positions and repeating this vicious cycle until you come to your senses half an hour or hours later, and then you realize your balance is half of what it was before. Like I said before, trading is designed to go the way you least expect it to. There are plenty of whales or institutional traders who prey on emotional traders just like you and I. Now that you've understood and learned these essential mindsets, let's jump right into the next video on what cryptocurrency is. So finally we come to what is cryptocurrency? If you're not getting into cryptocurrency, you are completely missing out. And I'm glad you're taking this course. Crypto is one of the fastest growing forms of investment since its explosion in 2017. I mean, just look at the charts. Every day during the cryptocurrency bull run, there have been coins that have been rocketing every day, going up 50, 60, 100, even 600%, as you've seen here. This is a 24-hour time frame, and there are at least 30 something coins that have gone up at least 100, 200, 300%. Looking at the volume, you could only have caught like about the top 10 of these and actually made some money. I mean, just really hammer in how fast the cryptocurrency market is growing. Just look at this graph of Bitcoin versus the Dow Jones. This is over the last 12 months, but this was right before the boom between December to April where Bitcoin completely exploded. So if you look at this point of the graph here, Bitcoin should be all the way up through this page, out of the frame. This is another graph of Bitcoin and its returns compared to other forms of investment and other bubbles or booms. As you can see, in 1 year, Bitcoin in 2017 ran up 1,034%. If you look here, US home prices over 10 years has barely moved. Over here, NASDAQ in 1994 to 2004 was a pretty impressive run. And as you can tell, gold prices from 2001 and 2011 have been moving slightly over the 10-year period. None of these compare to Bitcoin as a form of investment. No other form of investment in such a short time frame has made as many returns as Bitcoin. So let's get into what cryptocurrency is. Cryptocurrency is a digital asset that uses something called the blockchain. You've probably heard of this term before, but in order to understand why there's so much buzz around the blockchain and cryptocurrency, let's try to first understand the advantages and benefits cryptocurrency has to offer. So the first advantage of cryptocurrency is that they are not like bank transfers. Crypto transfers requires no extra fees, agents, or brokers. They don't have to deal with institutional firms like banks. The thing that makes banks inefficient is that they operate only on business days and they require transfer fees, which keeps the entire system going. So in this way, cryptocurrency makes for faster and cheaper transactions. The second advantage of cryptocurrency is that it is secure and confidential. Any transaction done with cryptocurrency is encrypted, safe, and basically anonymous. I'll go over the specifics of the blockchain later, but basically every transaction you make is recorded on the blockchain, which is like a ledger. And even though you can see every transaction from any public address, it's completely anonymous. Your Bitcoin wallet address makes it completely anonymous. So the third advantage of cryptocurrency is that it is quick and seamless even internationally. So say you're trying to transfer money from America to Canada. You would have to wait for the banks in America to communicate with the banks in Canada, and then you would have to wait for the banking institutions to confirm every transfer with the other foreign entity. Meanwhile, with cryptocurrency, you could just transfer into another public address, no matter what country it is. And in half an hour to an hour, depending on how many transactions there are on the blockchain, you would be able to complete your transfer. So when we're talking about the cryptocurrency industry, you have to understand the benefits of getting in early. I want you guys to look at this website called 8marketcap.com. It tracks the market caps of things like gold, Apple, Microsoft, there's Facebook, and then you see Bitcoin over here. Now, for those of you who don't know, what is a market cap? The definition is used mostly in stock investing. The definition of the market cap is widely used in stock trading. And basically what it is the total value of a company's shares. If you were to sell all the publicly traded shares of this company at this price, you would get its market cap. Now what traders usually do is to compare the market cap of one company versus another. This way you would in a sense compare how overvalued or undervalued one company is versus another. For example, as you can see here, it says Amazon has twice the market cap of Facebook, which, yeah, that seems pretty plausible. That seems like something that makes sense. So the reason I brought this ranking up is you can clearly see Bitcoin here with a market cap of 900 billion. What's important to take note of is that there is still a lot of room for Bitcoin to grow. If you look here, the market cap of gold is at 11 trillion. It's basically 11 times Bitcoin. Bitcoin has a smaller market cap than silver. The market cap of Bitcoin is only a little bit higher than Facebook's. It's still under Apple, Microsoft, Amazon, Google. It is still early, so there are so many opportunities to make money. Now that we fully understand what cryptocurrency is and the potential this market has, let's dive right into the next video about the blockchain. I'm glad to see you guys here once again. This video lesson is going to be about Bitcoins versus altcoins. What's the difference? So in order to understand what an altcoin is, let's look at the top altcoins in the cryptocurrency space. So probably the most well-known alternative coin is called Ethereum. So you guys might be wondering, what is the purpose of Ethereum? What does it do? Well, Ethereum is a decentralized software platform that enables smart contracts and dApps, or decentralized apps. A smart contract is a self-executing contract with the terms of agreement between the buyer and a seller being written directly within the code. What this does is that it opens up a lot of real-world implementations using decentralized platforms. In fact, some of the biggest names like Microsoft, Intel, JP Morgan, Chase, they're already building business-ready versions of software using Ethereum. So now that we covered Ethereum, let's go on to the next big coin. Many of you may or may not have heard of something called Litecoin. So what exactly is the purpose of Litecoin? If you haven't already figured out from its name, Litecoin boasts significantly faster transfers and at cheaper rates than most cryptocurrency coins. In fact, it was huge news when over 1 million Litecoins valued at $62 million were transacted for a fee of only 50 cents. That is just mind-blowing. So now that you understand the use cases for Ethereum and Litecoin, let's move on to Ripple. So what is so special about Ripple? Well, Ripple is an invention of Ripple Labs, and the Ripple token is actually being used right now in high-speed, low-cost transactions worldwide. In fact, it's the most used coin for cross-border payments, led by many financial institutions and banks around the world. As you can see from this list, it just goes to show how many partnerships Ripple has. If you look at this list over here, it just goes to show how popular Ripple is. Ripple has partnerships with American Express, MoneyGram, PNC, Santander, SCB. Apparently they're also partnered with Bank of America, as well as the Westpac Institutional Bank and Bank of Australia, and the Royal Bank of Canada. These are huge players in the banking industry. This just goes to show you how valuable Ripple is. Another altcoin worthy of the front page of crypto is Chainlink. Chainlink is an Ethereum token that powers the Chainlink decentralized network. This network allows smart contracts on Ethereum to securely connect to external data sources. APIs, and payment systems. Chainlink is also perhaps most notable for partnering with Google in 2019. The agreement allowed Google to utilize Chainlink's protocol on their smart contracts, allowing users to connect to Google's two most popular cloud services. So now that you have a good idea of the big name altcoins and their uses, let's look at the relationship between Bitcoin and altcoins historically. So this is a graph of Bitcoin side by side with the price of Ethereum over 6 months. As you can see, there is definitely a lot of correlation between Bitcoin and other altcoins. Personally, what I noticed is that when Bitcoin goes up, that is the signal of a bull market. But when there's too much volatility, altcoins will surely drop. For instance, when there are sharp price gains or price declines, altcoins usually have a bloodbath. But when Bitcoin is running up and sometimes when it goes sideways, altcoins rocket. So it's really important to find that sweet spot of when altcoins are going to rise based on Bitcoin's behavior. So when you're trying to decide between whether or not to invest in Bitcoin versus altcoins, take a look at this graph. There's the rolling 30-day volatility in the past 6 months of Bitcoin versus the main altcoins. As you can see, Bitcoin is the gold line over here, and it underperforms most of the altcoins. In fact, Chainlink was a huge winner, as you can see over here, as well as Ripple in last November. So it's really about being smart and noticing the relationship between Bitcoin and altcoins. My go-to strategy is when Bitcoin is in a clear bull market and it goes sideways. That's when I'll be investing heavily in altcoins. Usually when the price of Bitcoin goes up or down too quickly, I completely avoid altcoins. They're just going to get burned no matter what. So now that you have a good understanding of what altcoins are and its performance versus Bitcoin, let's move on to the next video lesson. Join me for the very important next video lesson on whether or not crypto is secure. So, is crypto secure? I would be lying if I said it was secure. In fact, there are so many hacks in the past of exchanges. There's a whole list of cryptocurrency exchange hacks, but I decided to only list some of the major ones. So perhaps the most well-known cryptocurrency exchange to have been hacked was Mt. GovX. It's recorded as probably the largest hack in history. The reason for this is that Mt. GovX was one of the most popular exchanges at the time in 2014. In fact, they processed 70% of all cryptocurrency transactions. This hack of 750,000 Bitcoin left Mt. GovX devastated, and they had to file for bankruptcy. Another well-known hack had been on Bitfinex, one of the major exchanges that still exist today. On August 2nd, 2016, 12,208 Bitcoins were moved from the exchange into unknown wallet addresses. That's worth well over $750 million today. On August 2nd, 2016, Bitfinex was hacked for approximately 119,756 Bitcoins. Using today's exchange rates, that's nearly $7.5 billion. Oddly enough, hackers have only moved 12,000 Bitcoins so far. And strangely enough, Bitfinex still operates to this day. Now, another notable hack, even though it was not a large amount, involved Binance, one of the largest cryptocurrency exchanges that are trading today. So somehow hackers were able to compromise high net worth accounts on the exchange. And in doing so, they transferred about 40 million in Bitcoins into unknown wallet addresses. Luckily, at that time, it was about 2% of Binance's overall holdings. Binance reimbursed these users for their lost crypto. But it goes to show even the biggest cryptocurrency exchange is vulnerable to hacks. So now one of the last hacks I'm going to cover is the biggest recent known hack. This hack was made on Coincheck, one of the largest cryptocurrency exchanges in Japan. Somehow hackers were able to make off with over $500 million in a cryptocurrency asset called NEM coins. Unfortunately for them, Coincheck flagged these addresses, and this shows you the power of the blockchain. Now, any exchange these coins are transferred to is automatically flagged and rejected. So basically, the hackers can't even sell those stolen tokens anymore. And they're basically worthless. Alright, Kevin, so let's avoid putting large amounts of crypto on exchanges, right? What else can possibly go wrong in the world of crypto? Well, another very clever scam that has been going around are fake email and Twitter scams. One very notable scam was the fake Elon Musk giveaway, which cost a man over $500,000. So a man saw a tweet from a Twitter account he thought was from Elon Musk, just because it had that verified blue check mark. Apparently that link on the tweet led the man to a site where there's a timer counting down for a Bitcoin giveaway. People were invited to send anything from 0.1 Bitcoin to 20 Bitcoins for a chance to double that. So unfortunately, when this man sent his 10 Bitcoins to this wallet address as advertised in the giveaway, and he realized his mistake 30 seconds later, it was too late. The damage has been done. So the moral of the story is to avoid any sort of phishing. In fact, giveaway scams like this are fairly common. In 2020, about 16 million were taken in giveaway scams. In 2021, that number was 18 million. In order to avoid these scams, just avoid any suspicious emails or Twitter accounts. I mean, just don't send Bitcoins to some random address. Alright, so I got it, Kevin. Do not send Bitcoins to random addresses you don't know. Don't trust unverified Twitter accounts. Don't trust suspicious looking Twitter accounts. What other ways could I protect my cryptocurrency? Probably one of the most common ways to completely secure your cryptocurrency is by storing it on what is called a cold wallet. Basically, what a cold wallet is that it's a physical wallet. And nothing is more secure than something that's physical, right? Something that you put under your bed every night you sleep. Now, one of the most common cold wallets out there is the Nano Ledger S. The Nano Ledger S has many capabilities like USB connection, fingerprint scanner, personalized 20-digit passcodes. It also has an app you can download which you can track the price of your cryptocurrency assets on. Needless to say, this is your best option if you're a long-term cryptocurrency investor. Just buy one of these babies and then buy all sorts of cryptocurrency and then store it on that ledger and don't touch it for years to come. One very important disclaimer is that if you decide to buy this, you should definitely buy it from their website. Do not buy it off of Amazon or eBay. You don't know whether or not these things have been tampered with. Now that we have explored the risks of crypto and gone through the ways on how to best protect your cryptocurrency assets, let's move on to the next very important video about crypto terminology. Hey guys, now I want you to pay attention because this part is going to be very important. Included in this course is a list of crypto terminology. I compiled a list of 50 different words that I think will be essential in helping you understand the cryptocurrency space. So please, it is very important that you look through this list and use it as a reference as you go on to different video lessons later on. You can find it in the course resources section. Here's a really quick overview of this list of crypto terminology. You have terms like fiat currency, hard fork, proof of work, dApps, mining, public keys, hardware wallet, ICOs, which are very important, hash, DDoS attack, stable coins, what are they? Utility coins, what are those? What is a block reward? What are master nodes? And then you also have really important investing terminology that people always use, like pump and dump, bag holders, hodl. What are whales? They are very important in controlling the cryptocurrency space. So as you can see, this list is essential and you would need to be able to have full understanding of what these terms are before you completely understand how to make money in crypto. Now let's hop on for the next lesson, which is vital. Tools and resources that will help you maximize your profit when you trade crypto. Hello and welcome to the tools and resources video lesson. So as you can see, listed here are the most important resources I have used, many of my students have used in maximizing their crypto profit. If you are not utilizing these tools, you are at a complete disadvantage. So welcome to coinmarketcap.com. If cryptocurrency had a Pokemon index, this would be it. This is where you can find everything you need about a crypto coin. And considering how there are over 9,400 different crypto coins right now, it is a vital resource you should be using. Now, some of the important things to take note is the ability to look at the highest market cap cryptocurrency coins out there right now. Right off the bat, you can see that every coin is listed in order of their market cap right now. So coins with the highest market cap, like Bitcoin and Ethereum, are listed on top. Other very important features of CoinMarketCap is that it lets you look at the highest gainers and losers in the past 24 hours. As you can see here, you can actually filter by clicking on it, and then you can see the highest 25 for And then you can see the highest winners in the last 24 hours in terms of percentage. If you click it again, you can see the biggest losers in the last 24 hours. So right next to the 24-hour filter, you can see the 7-day filter. If you click it, you can see the 7-day largest percentage gainers, which seems to be Solana. And then clicking it again, you would see the biggest losers. I'm sorry, IOST. So these features are very important because remember what we talked about market cap. There's a way of assessing the value of one coin versus another. If you scroll down the front page of this list, you can see the lower market cap coins. This way you can assess whether or not these coins are fairly valued. For example, Icon is at the 86th rank on this list, which I'm pretty disappointed at. And currently their market cap is around 1 billion. If we scroll back up through the list, what I'm noticing is that Dogecoin, which has skyrocketed in the past few days, unfortunately, in my opinion, is a meme coin and has no use case, but it's sitting at 35 billion. So I'm kind of surprised by that, but also not surprised since it's also available on Robinhood, which is a huge exchange for everyone to be able to trade the coin. So I understand why there was a price hike in Dogecoin. Another very important feature of CoinMarketCap is the volume, as you can see in this side over here. In order to understand why it's important, let's go down to maybe page 6. And then let's look at the biggest winners in the past 7 days, right? As you can tell, there was a token called ERC20, which skyrocketed 1,883% in 7 days. If you look at the volume though, it's sitting at 77,000. So what that tells you is that not many people are trading it. So even though looking at 1,880%, you might be thinking, oh, I missed out. Looking at the volume here, it basically tells you that not many people were able to make these returns. Like one trader could have just bought 50,000 or so of the coin and moved that 1,800 something percent by himself. Usually the volume I'm looking for is at least 10 million as an indicator of profit potential in that coin. There are also very cool features like the ICO calendar, which if you looked at your crypto terminology list, ICO stands for initial coin offering. And here you would see the complete calendar. And here you would see the complete calendar of coins that are going to be released to the public. By looking at these coins and then researching it on like Reddit or Facebook groups, you can judge whether or not it is a very hyped coin. If it ends up being very hyped and you think it has long-term potential, you could get in at a price way lower than everyone else. So now that we covered coinmarketcap.com, let's move on to another very useful tool I use. This is my go-to charting resource. So just looking at the front page, you would be able to keep track of the different indexes. On top of that, you can see what traders have written in like a blog post format and their very own technical analysis and charting. So as you can see, if we click here, you would be able to see what DJR0726 wrote about Bitcoin. So over here, he actually predicted Bitcoin would fall on this support zone before rocketing. So he's saying that Bitcoin would be going up to 80K by June. That's a pretty bold statement. If you scroll down, you can see more analyses. You could also see highest talked about stocks on the right hand side over here. There's also a news section. And then this basically covers every different type of trading like Forex, gold, US stocks, Canadian stocks, even Chinese stocks, and most importantly, cryptocurrency. So if you type BTC USD, you would be able to look at the different prices of Bitcoin on different exchanges. The one I want to look at because it has the highest volume is Binance. So we click that and then we look at the full featured chart over here. Yeah, you can see it's kind of overwhelming because I am using so many indicators right now. But as a free member of TradingView, you would have up to 3 different indicators. Personally, I use about 7 or so. Later on in this course, I will cover the types of indicators that I use to secure profit consistently in crypto. So pretty much any coin traded on a major exchange, you can look at the price of. So now that we have covered CoinMarketCap and TradingView, I want to talk about the last important tool I use. So I use two more tools. One is called CoinMarketCal. So you know how in US stocks there are quarterly earnings reports? And then you would have a website where you can see all the quarterly earnings reports for companies of that month, right? So CoinMarketCal is kind of like that, but for crypto. You can see any major update for any coin on CoinMarketCal. So you can see there is a balanced DeFi launch for Icon, which is pretty hypey. And then there's a burn event for IOTX, which means they are going to be eliminating a certain number of coins from its total supply, which in a sense it increases the price of the coin because it lowers the total supply. It also has important news like when a coin is going to be listed on a major exchange, which in history is usually a pretty good catalyst for whether or not a crypto will rise significantly in the short term. Because if you think about it, once a coin is listed on a major exchange, more people will have access to buy that coin. So just going through the filter features, you can look up the top 10, 100, 300 coins or DeFi coins. You can also look at all the different exchanges. Maybe you can't trade on all of these because there are certain restrictions. And then you can also filter by what type of news it is. Like, is it an airdrop? Is it a partnership? Are they releasing a white paper? Is it an ICO or initial coin offering? So needless to say, CoinMarketCal is an invaluable resource for trading crypto. By being the first to hear about a certain news that will affect the price of the coin, you can get in at a price before anyone else. So finally, the last tool that I think is very important to use is a tool that helps you monitor airdrops. So it is called airdrops.io. Now, if you look at your crypto terminology list, you would find that airdrops are very important to consider. Essentially, what they are PR stunts made by new coins, and in exchange for things like signing up or sharing a tweet or something like that, you would be able to get a certain number of free tokens of that coin. So let's see what the hottest airdrops are right now. It says there's a coin called FIO that is very hot right now. So if you click on FIO, it tells you a step-by-step process of how to get these free airdrops. So number one, you would create an account on Binance, then you would do the verification, and then you would create a FIO wallet. And then you would have to do a quiz apparently, and then you would finally get your 20 free FIO coins. Now let's see what the price of FIO is. Is this worth it? So if we look up FIO protocol on CoinMarketCap, it's sitting at about 25 cents. So doing all this for about 20 coins, that's about like $5, which is $5 free. Just sign me up already, you know? It's not that bad actually, damn. So what I used to do, I would camp this site. I would I would find coins that have easy sign up processes, and then I would actually make multiple accounts if I can, and I would get the free airdrops. Then depending on how hyped the coin is, I would either keep those airdrops or sell them immediately. In the past, I've actually made over $20,000 in one airdrop just by signing up for hundreds of different accounts. So now that you have a very clear fundamental about the tools and resources that you should be using in crypto, join me in the next video lesson to learn about tips and strategies that would guarantee you success in crypto. Hello and welcome. I'm so glad you guys could join me for the final video lesson of tips and strategies for success in crypto. So as you know, there are thousands of coins in crypto out there. So it is not always practical to diversify your portfolio with hundreds of different altcoins. Instead, the best way to make crypto gains is to follow online cryptocurrency communities to figure out which coins are the most talked about or most hyped at that time. That is why it is so important to join different Facebook groups about cryptocurrency. This way you can optimize your feed whenever you go on Facebook and see immediately which coins people are talking about. There have been so many instances I've seen where people are talking about this one coin, like SafeMoon, right? And if you see enough people talking about that coin, usually in the next 1 or 2 days, it's hyped enough where it actually climbs. So usually it would be a good opportunity to set up a trend trade. Sometimes, however, there would be instances where you see someone talk about a coin and it would be too late or the peak of the hype. So through trial and error, you would have to figure out whether or not this coin is hyped based on technical indicators and how many people are talking about it. But I will cover that much more later in the advanced section of the video course. So another very good online community to utilize is Twitter. What I advise you to do is to follow every big coin on Twitter. I also recommend following all the cryptocurrency exchanges that are big on Twitter. This way you can get up-to-date news and alerts for any coin or exchange, and it actually makes a big difference. For example, when Chainlink announced that they were partnered with Google, it climbed like crazy immediately. Back in 2017, there were also many coins that were being listed on major exchanges like Binance or Bithumb. And immediately from those announcement tweets that the coin was being listed, it would jump like 10, 30, maybe even 50%. So obviously that doesn't happen as much now, but there are still recent instances where you can make big money on tweets. For example, when Elon Musk first tweeted about Dogecoin, I looked at the price history and there was actually a 15-minute window from when he first posted the tweet before it jumped 20%. So Twitter makes a huge difference. So one of the best online communities I recommend to find coins before they moon or make big price gains is Reddit. On average, in my experience, Reddit users were actually more knowledgeable than Facebook users. I suggest following any sort of cryptocurrency or Bitcoin Reddit or altcoin Reddit. My favorite subreddit to find potential 10x coins is Crypto Moonshots Reddit. So if we look at Crypto Moonshots Reddit, it's a community about 273,000 members, and 8,200 of them are online right now. So this is a pretty big community already. There are a lot of random coins I'm seeing like Moonbud or Supdog. So you would have to figure out which coins are obviously not going to climb and which are hyped enough and people are taking seriously. So what I usually do is I filter by the top upvotes. So by clicking on top right now, you can see what the most upvoted or talked about coins people are posting about. So looking at the top 3 threads over here, apparently Moonbud is super hyped right now, and everyone is talking about it. Now if you look at the price of Moonbud, apparently only 3 days ago it was sitting at 1/5 of the price it is today. So if you were to monitor these subreddits, you might have been able to catch this train. So the 4th great resource I use is obviously YouTube, right? YouTube is an amazing resource for following crypto. You should honestly follow the most popular crypto channels like Journey Crypto or Coin Bureau. They usually have up-to-date news about the crypto space as well as strategies they use. A little shameless plug, but I also have a YouTube channel. If you search up my name, Kevin O, I do post content about crypto. Ultimately, it is very important to identify which channels are your news resources for the crypto space in general, which channels are for finding long-term potential coins, and which channels you should tune in for potential short-term coins. There's so many different YouTube channels for so many different ways of creating crypto. So in this video lesson, I'm also going to go briefly about possible trading strategies. Don't worry though, further into this course, I will be going over my advanced trading strategies for consistent profits. In this video lesson, I will just be going over a brief overview of what I categorized different trading strategies in crypto. So the first trading strategy is scalping. So it's very important to identify what type of trader you are. Are you a short-term trader? Are you someone who is planning to look at a coin 24/7 and use technical indicators to get into small positions where you can profit 1 to 10% moves? If you are, then you are a scalping type of trader. You would need to frame your strategy and look for coin picks that would help you benefit most from this strategy. So the number 2 trading strategy is swing trading. This usually means you're holding a coin for hours to days. You should be applying this strategy to coins you think have potential in the next few days. There should usually be some catalyst or big news or just a lot of hype behind this coin before you decide to swing trade it. So the final trading strategy is the long-term hold. This is good for coins which you think have long-term potential, such as promising future roadmaps or partnerships with big companies. So like we talked about before, when Chainlink partnered with Google, there was a period of months where the coin climbed like. Also something to consider is the fact that most exchanges now offer an APR interest percentage per year as long as you keep that coin on the exchange. So that is something to keep in mind when you're scouting for potential coins to hold for long periods of time. Just to wrap up this lesson, personally, one of the tools I found the most helpful if you're a scalping or swing trader is a volume pinger. The one I use, because there aren't many out there, is CryptoZiz's volume pinger. You can just Google it. So what it does is it essentially monitors the coins on Binance. So whenever a coin makes a big change in volume or price, it pings on this volume monitor to see clearly how much that net volume change was, what percentage of that net volume percentage is. So it's very important in telling you what coins people are buying at this present moment, at this present minute or second. Usually it's a little lagging, usually it's kind of a lagging indicator and shows you coins that have climbed up a lot. But using the proper technical analysis, you can be able to catch the second wave of when the price of the coin falls and then jumps back up. So as pretty much a day trader, this was really important for me to figure out, what coins are going up at this moment. Can I make some profit right now? So this pretty much wraps it up for the first module. The next module will be very important. I will be showing you how to properly set up your wallet and which cryptocurrency exchanges are the best to buy crypto from, which are the best to trade crypto on, and overall which ones you should be using. I'll catch you guys on the next lesson. Hello and welcome guys. I'm glad you can join me for the second module of this course. Before going into this module, I want to emphasize how important it is for you guys to understand which cryptocurrency wallets are the best for you guys to use. By correctly setting up and choosing the right wallets, you would decrease the risk of having cryptocurrency stolen from you. Additionally, by choosing the right exchanges to start with, you would be able to save on trade and withdrawal fees. Identify those exchanges with the most profit potential. For example, exchanges nowadays have annual percentage return for just keeping your crypto on that exchange. Also, different exchanges have different altcoin currencies available to you for trading. Showing you guys the cheapest places to buy your crypto could be the difference between 1 to 5%, which could save you hundreds or even thousands depending on how much crypto you're trying to buy. Overall, paying very close attention to these next few lessons could save you a lot of time and a lot of money. So in this module, the first lesson will be on cryptocurrency wallets. I'm going to go into detail about what the different types of cryptocurrency wallets are. I'm also going to give you examples of the cryptocurrency wallets that most people use. I will also be telling you the ways you can best secure your cryptocurrency wallet. Alright, so for the first lesson of this module, I will be going over cryptocurrency wallets. I will be going over why you need a cryptocurrency wallet and go a little into detail of the technical aspects of how a cryptocurrency wallet works. I'll also be going more in depth into the different types of cryptocurrency wallets out there. We already talked about hot wallets and cold wallets, but let's go into the specifics. So lesson 2 of this module will be about setting up your wallet the right way. I will be going over the popular types of wallets that people use. Additionally, I will be telling you how you can best secure your cryptocurrency wallets so that you will never be putting your crypto at risk. And then the third lesson of this module, I will be going over one of the most popular places to buy crypto, which is Coinbase. I will be going over ways to set up your Coinbase account, how to buy crypto, and how you can secure your Coinbase account. I'll also be going briefly over the different advantages of different cryptocurrency exchanges, as well as the different exchanges you should be trading your crypto on and the different exchanges you should be buying your crypto on. Finally, in the last lesson of this module, I will be going over how to set up Binance, which is one of the most popular trading exchanges that I recommend beginners to use. I will also be going over the many features that Binance Exchange has. So let's go into the first lesson and go into why you need a cryptocurrency wallet and what cryptocurrency wallets are available to you. Alright, so welcome to this lesson. I will be explaining what cryptocurrency wallets are exactly and the different types of cryptocurrency wallets available. So Bitcoin and other cryptocurrencies, like we covered in earlier lessons, are digital currencies, right? You would need to store digital currencies in a cryptocurrency wallet, which is a software program that stores private and public keys. Essentially, when a person sends you Bitcoins or other digital currencies, they are signing off ownership of their coins to your wallet address. If your public and private keys match the ones the sender is sending to, your digital wallet balance will increase and the sender's digital wallet balance will decrease. So there's no actual exchange of real coins. The transaction is recorded on the blockchain and a change in the balance of your wallet. Now let's go into the different types of wallets there are. Like I mentioned in the earlier module, there are two different types of wallets, right? You remember? Hot wallets and cold wallets. If you remember correctly, hot wallets are those that are connected to the internet. And cold wallets are those that are offline, right? Now let's go more into the specifics of the different types of hot and cold wallets there are. Alright, so let's talk about mobile wallets. So by downloading an app on your phone, you would be able to create a cryptocurrency wallet. Essentially, the app is the third-party software which will be storing your public and private keys. Generally, these are similar to desktop wallets, which we will be covering more on later on. Some of the most popular types of mobile wallets are Exodus, Electrum, Mycelium, and BRD wallet. I'll be going more into detail on them in the next lesson. So that brings us to the next type of wallet, online wallets. These are wallets that can be accessed from any device connected to the internet. Your private keys are stored on a server which is constantly online and controlled by a third-party wallet. This is basically like the wallet provided to you by most cryptocurrency exchanges. And as you can probably figure out, it is probably the least secure option out there. But there are certain advantages of having an online wallet, like being able to instantly trade and transfer your crypto, instead of having to wait to transfer your crypto from a mobile, desktop, or a hardware wallet. So now that we have covered mobile and online wallets, let's go to desktop wallets. So desktop wallets are wallets created on your computer by downloading a software. Since it requires an internet connection, when you use the wallet, it is generally considered a hot wallet. But what differentiates a desktop wallet from an online wallet is that this software is not constantly online. In fact, the public and private keys of your wallet is stored on your machine on the software. That alone makes it more secure than online wallets, which is susceptible to hackers on the internet. So let's move on to the next wallet type, which are paper wallets. You probably heard of them before, right? People can store cryptocurrency on a piece of paper, or essentially what it is your cryptocurrency wallet, private and public keys printed on a piece of paper. Since these wallets are completely offline, they are definitely considered cold wallets. These are great ways to store crypto for long periods of time without touching it. The only worry I have with paper wallets is that you would have to protect them physically. If you do not back up your paper wallet and you spill water on it, or maybe your dog eats the piece of paper, you lose all your cryptocurrency on that wallet because you cannot recall the public and private keys to that wallet. So if you decide to store crypto on a paper wallet, I highly suggest you back it up on other places like a Google Doc, or maybe in your notes, and then put it in a folder on your desktop or something like that. So finally, we move on to hardware wallets. This is probably your best bet if you're a long-term holder and you intend to buy crypto and just store it away and forget about it. Hardware wallets are essentially upgraded paper wallets. They're completely offline cold wallets with added features, such as the ability to store many different types of crypto besides Bitcoin, as well as using an app to track the portfolio of your coins on that hardware wallet, and added security measures such as two-factor authentication and more passcode features you can add to increase the security of your wallet. Now that you understand how a cryptocurrency wallet works and the different types of cryptocurrency wallets there are out there, you are now one step closer to being able to start your crypto trading journey. Join me in the next video lesson on the best cryptocurrency wallets to store your crypto and how you can set them up. Hello and welcome, guys. Welcome to the third lesson of this module, setting up and securing your cryptocurrency wallets. I'll be going over some of the desktop wallets I prefer to use, as well as some of the mobile wallets I use for storing my crypto, and in general, the ways you can really secure your cryptocurrency wallets, and the added steps and features you could be taking to completely secure your cryptocurrency wallets. So welcome to Exodus Wallet. This is one of the most popular options for desktop and mobile wallets. And all you have to do is you first go to www.exodus.com. As you can see, Exodus Wallet has many features, such as being able to store 100 plus different types of cryptocurrency assets, as well as being able to see a portfolio of the digital currency assets on that wallet. Also, you have the awesome feature of being able to sync your mobile and your desktop wallets. Not only that, but it also lets you connect to Trezor hardware wallets, which is essentially a hardware cold storage wallet for cryptocurrency. So this great feature gives you the ability to monitor your offline wallets, which means as long as you have this Trezor hardware wallet, it will never be susceptible to hackers online. So the first thing we're going to do is click on download, and then we're going to choose desktop. And then since I'm using a Windows PC computer, I'm going to choose download Windows app. Okay, once it's finished downloading, click run. And that was very fast. It has been installed. So click OK. I search up Exodus Wallet, and then I open it on my PC. So once you have your Exodus Wallet downloaded, you can make your first deposit by clicking here. So you can choose between many different cryptocurrencies to deposit as your first crypto, but most likely you're going to be using Bitcoin. So let's just choose Bitcoin, and then let's test it out, right? Let's click receive. After that, you can see your public Bitcoin wallet address here. And basically, if you're on an exchange like Coinbase, you could have the option of putting this address in if you have cryptocurrency on your Coinbase wallet. So then you would just paste your wallet there, and then you would just send the transaction. So Exodus Wallet has many features, including acting as a sort of portfolio and letting you see the different price changes, as well as exchange one cryptocurrency asset for another. Not only that, you would also be able to get annual percentage return on certain types of cryptocurrencies stored on this wallet, such as the one shown here. Additionally, you would be able to link your Exodus mobile wallet with your Exodus desktop wallet. You would just have to go on your phone and then scan this QR code. Not only that, it also allows you to connect your Trezor hardware wallet. So if you bought a Trezor hardware wallet, the physical one, you can actually connect it to this program here on your computer. So over here you can see the portfolio of the coins you have on your wallet. The first thing I would do if I were to install and keep crypto on my Exodus wallet, I would go to security, and then I would go to additional security measures and back up my wallet. So in order to back up my wallet, I would need to set a password, and then I would have to memorize that password. And then the software is going to give you a 12-word phrase, which you would have to write down somewhere safe. So now that your backup is complete, your wallet is now as safe as it can be. Just make sure you remember the passcode you used for your backup, as well as the 12-word secret phrase. Keep it somewhere safe. Alright, welcome. So let us go over how to set up your mobile crypto wallet. Alright, so just follow with me on your phone. The first thing you do is go to the App Store, right? And then we're going to be using BRD wallet. So let's just search that on our phone, and then we see it, BRD Bitcoin wallet, install, then type in your password. Okay, now that you have installed your cryptocurrency wallet, let's just click on it, and then we're going to go to get started. First thing you have to do is you have to set your PIN for your wallet, so make sure it's something that's easy to remember but not easy to guess, right? So I'm going to set up my PIN set. So you have the option of backing up with your iCloud recovery, which it's up to you to do. It's an added security measure in case you lose your wallet. Also, this is very important. You would have to generate your private recovery key, right? Just like how on the desktop wallet you needed to write down a 12-word phrase, you would have to do the same here. So remember to store this phrase in a very secure location, okay? So you have to write down these words. For me, I'm just going to put it in my Google Doc really quick. Okay, so let's do this. Reject, level, garbage, okay. Rookie. Tape off Alright, so now that you have written your security phrase somewhere safe, they're going to make sure you remember your security phrase. So looking back on what you wrote, so this is the 11th word and this is the 9th word. Okay, congratulations, you completed your recovery phrase setup. So now you can go to your wallet, and wow, just look at that. This is your portfolio of your wallet. It shows you the balance in Bitcoin, Ethereum, BRD token, USD coin. If you wanted to add different types of cryptocurrency, you can just go to manage wallets, and then you can go to add wallets. So you can just scroll through. These are all the different types of cryptocurrency you can add to your BRD wallet. So there are a lot of choices here. So you have to remember, BRD wallet is not just a wallet. You can actually buy Bitcoin and other cryptocurrencies from this wallet here. Just go to buy, and then let's say you want to purchase 10 USD in Bitcoin, right? So then you press that, and then you have the option of choosing bank transfers, Apple Pay, card, or cash. So let's say, for example, you want to put Bitcoin into your mobile wallet, right? So the first thing you would have to do is you would have to tap on Bitcoin here. And then you can see send and receive, right? You would have to tap on receive. And then there you go. You can see your Bitcoin wallet address here. So from Coinbase or another cryptocurrency exchange, you just enter, copy and paste your Bitcoin wallet address, and then the amount of Bitcoins you want to send, and then you can send crypto to this mobile wallet. Same goes for Ethereum. You can just tap on Ethereum and then see your Ethereum wallet address. Make sure to never mix up these addresses, but luckily, most websites or crypto wallets, they will tell you if it is the right address that you're sending to, because there's a certain string of alphanumerical characters that are unique to Ethereum and a certain string that are unique to Bitcoin. Whatever you do, just make sure you do not send it to someone else's Bitcoin wallet address, though. You may never get your crypto back. So, if you feel like your cryptocurrency wallet is not secure enough, the first thing I would suggest you to do is go to menu option on the bottom. Just tap that over there, and then you would go to security settings, right? And then you have the option of adding a Touch ID. So if ever your phone gets taken and then perhaps the thief could guess your PIN number, you can add this Touch ID option, right? It's very useful. So you have the option of adding Touch ID for unlocking the wallet, and the option of adding Touch ID for when you send crypto from your wallet. And then, as you can see in the middle, in the bottom middle of your wallet, there is something called trade, right? Just you wouldn't be needing this much, but let's just tap on trade. So basically, this is where you can trade your cryptocurrencies into other cryptocurrencies in your wallet. Since I don't have any crypto in my wallet at the moment, I can't show you guys, but just keep in mind it's there. And that pretty much wraps it up for setting up your mobile cryptocurrency wallet. So now that we have covered how to set up your desktop Exodus wallet as well as your BRD mobile wallet, before we go to ways to secure your wallets, let's just go over another type of wallet we talked about in the last lesson, which are paper wallets. So out of curiosity, how does one set up a paper wallet? Well, one of the most popular ways to set up a paper wallet is to go to bitaddress.org. You're immediately going to be able to generate your own random cryptocurrency wallet address. So all you have to do is move your mouse and type some random characters just to add some extra randomness and speed up this process. I'm going to, move my cursor around as I put some random alphanumerical characters into the text box. It's kind of fun, actually. Alright, there we go. You now have generated your very own Bitcoin wallet address. So it kind of looks like this. This is the public key, and then on your right hand side this is the private key. So the first thing you would do to make it more secure is by being able to add a BIP38 encrypt key. So all you have to do is go to the wallet details and then check this box, and then you would be able to enter your very own passcode phrase. I'm just gonna do something random, and now you have added an extra security feature on your wallet, which is encrypting it with a BIP38. So if you wanted to print out your wallet, you can just go to paper wallet, and then you can see these images, and you would just be able to copy or paste or save as PDF, and then you can just print them straight on a piece of paper. And remember, if you wanted to send Bitcoins to your very own paper wallet address, you would just have to copy and paste this public key and then enter it when you withdraw or transfer your crypto out of your wallet from maybe an exchange or another desktop. Overall, it's very cool, but I wouldn't recommend just leaving your entire cryptocurrency in just on a piece of paper, right? So obviously I would want to store my public key and my private key I see here on some other place like Notepads or Google Drive, Google Docs, or something like that. Alright, so now let's move on to the additional ways you can secure your cryptocurrency wallet. So most wallets you'll be using will have these features. The first step to securing your cryptocurrency wallet is by enabling a two-factor authentication method. So most things, even banks or like Gmail, when you sign in, you have the option to enable two-factor authentication. So what that is that you would have to download something called the Google Authenticator app on your phone, and then you would just scan the QR code that they provide you on the screen when you're trying to set up the authentication, and then this links your account to the Google Authenticator on your phone. So whenever you log into your cryptocurrency wallet, you would be prompted to give the generated code from the Google Authenticator app shown on your phone into the text box. Now this Google Authenticator code, as you can see, it refreshes and generates a new code every 30 seconds. So that's how secure you can make your wallet. Even if someone has your password or ID to your wallet on an exchange, they cannot log in without this authentication. Other two-factor authentication methods include being able to receive like a text to your phone, right? An SMS verification process. So the second way to secure your wallet is to encrypt your Bitcoin wallet. So what this means is that you essentially add an additional layer of security by having a passcode required whenever you try to access your wallet. So most online wallets will definitely offer you that option. The third method is backing up your wallet. As I showed you when I set up the Exodus desktop wallet, right? There is a way to back up your wallet, which is essentially, as you remembered, it gave you a 12-word phrase, right? So this 12-word phrase you would have to write down somewhere safe. In the event of you losing your private key, you would be able to enter this 12-word phrase on the cryptocurrency wallet software or platform you're using, and then they will be able to recover your private key for you. So that's how powerful this phrase is. So the fourth way you can secure your cryptocurrency wallet is by implementing something called a multi-signature. So again, many banks use this, and also Gmail already uses this. Essentially what it is confirming your login, right? Whenever you attempt to log in or access your cryptocurrency wallet, you would receive a prompt on your phone for devices that already have history or access to this wallet. And then you would have to confirm on those devices that you are letting a new device log on to or access your wallet. So the fifth thing you can do to keep your wallet as secure as possible is to just remember to keep the software of your wallet updated, right? Just make sure it's the latest version every time, or it may cause you a lot of trouble trying to access your cryptocurrency wallets. Now that we have covered the different types of wallets and ways you can most secure your cryptocurrency wallet, now let's move on to the very important lesson of purchasing your first cryptocurrency. I'm going to be covering which exchanges you should be using to buy and trade cryptocurrency. So I'll see you guys in the next lesson. Welcome to this lesson about cryptocurrency exchanges for trading and buying crypto. Before going into the lesson, I want to emphasize that this lesson is going to be very important. This information is going to help you choose which cryptocurrency exchange is going to be best for you to buy and trade crypto on. This can potentially save you hundreds, if not thousands, in cryptocurrency withdrawal or trading or transfer fees. Also, being on the right exchange means you would be able to have access to hundreds of altcoins that are going up 20, 40, maybe even 80% every day. So you definitely don't want to be losing out on potential gains there. So when you're considering which cryptocurrency exchange to use for buying and trading crypto, there are many factors to consider. There are things like annual percentage return for when you keep your crypto on that exchange, as well as number of altcoin pairings there are for you to trade on in that exchange, as well as the withdrawal and trading fees, and the volume on that exchange. So APR percentage is very important, right? Especially if you're a long-term holder for crypto. If you decide to buy crypto on that exchange and hold it, you want the exchanges paying out the most APR, right? And if you're serious about your APR or annual percentage return on your crypto, every exchange now is getting more and more competitive about the rates that they're going to give you for crypto you keep on the exchange. So for instance, some of the most popular exchanges with the highest APR percentages is Swissborg.com. They give up to, 37.55% every year for USDC coins, 18% for Ethereum, and you would actually be able to calculate how much you would get after 1 year. Another site which offers high APR percentages is crypto.com. Just take a look at the long list of currencies crypto.com offers and how much percentage they're giving. It's actually kind of crazy. They give 12% a year for Tether, and then they give 12% for USD coin, 6.5% for Bitcoin, which is not too bad. The most important thing is that they support so many different coins for this APR reward. Another popular site where people, sign up to just buy their first crypto is Voyager.com. So if you take a look at their interest rate programs, they have a long list of tokens. It seems like looking through these different sites, they actually have very different rates for different coins. So it's up to you which coins you want to buy and hold on the exchange. So you should take a look very carefully if you decide to go down this route to find the highest paying percentage for your tokens. So that brings us to the number 2 most important variable when it comes to choosing which exchange is the best for you. It's the number of altcoin pairings. So let's just go back to CoinMarketCap really quick, and you would be able to see the most popular traded cryptocurrency exchanges on this list over here. So as you can see, Binance is the number 1, and then Coinbase Pro comes in at number 2. Now if you go down, there's so many available exchanges to trade on, right? So let's just choose a random exchange, Bittylicious, right? If you were trying to use this exchange, it would be very, very difficult for you to use this exchange because there would not be enough volume to support your trading. Because you have to remember, what is trading, right? Trading is basically having a buyer and a seller, right, on that exchange. You would need a seller before you can even buy a certain coin on the exchange. So without enough trading volume on an exchange, you would find it very hard to get the cryptocurrency assets you want at a better price because there's less liquidity. The bid-ask spread is larger, right? If you were to go back and trade on an exchange with high trading volume, you would be able to find someone who wants to sell you crypto closer to the price of the crypto itself, right? What I generally found as a trader is that Binance is hands down the best exchange to trade on. It has the most liquidity, most features, and most altcoin pairings, as you can see on this side over here. Even though Coinbase Pro is a really popular option, you would be losing out on a lot of potential gains because there are only 58 altcoin pairings that you can trade on. I mean, that is still a lot, but you are still missing out on a lot of potential profits. What I noticed as a trader is that you would generally want to stick with the top 10 exchanges in terms of trading volume, because even having traded on Kucoin exchange, I found it very hard to trade on the less popular coins and get in at the prices you want and to completely fill your order. For the purpose of this course, I will probably be sticking with trading on Binance Exchange. So that brings us to the third most important factor when you're considering an exchange, the withdrawal or trading fees. Now, every exchange is going to be very different when it comes to withdrawal fees. Generally, the withdrawal fees are similar for most exchanges, but where exchanges either break it or make it is the trading fees. In my opinion, the best exchange with the lowest trading fees is Binance. So how its fees works is that there is a fee percentage for a maker when you're trying to force a trade, and a taker fee when you submit a limit order and then someone takes the trade. Now, as you can see in this chart, there are different tiers depending on how much trading volume you have on your account. So unless you're having more than 50 Bitcoin of trading volume, you're going to be in this bracket over here. What's great about Binance is that they offer 25% off if you bought some BNB tokens, which is their exchange coin. So if you have some BNB tokens, you can be actually trading with this fee percentage, which is 0.075%, which is not bad at all. So generally, the most popular exchange where people buy their cryptocurrency from is Coinbase, because it's the easiest, right? You can link it to PayPal or credit card. It's also very secure. One important thing to take note of is that certain cryptocurrency exchanges will be restricted to certain countries or states. In general, what I found was that if you're a resident of the New York State, you would be faced with the most restrictions when it comes to different exchanges you can buy or trade crypto on. But luckily, you would be able to use 2 exchanges if you're from New York State. First, you can use Coinbase to buy your coins. Now, Coinbase is kind of limited in the number of coins you can buy, sell, and trade. So you would actually be able to use Coinbase Pro to trade your crypto on, which I will be covering in the later video lesson. Additionally, you would have another choice of being able to buy, sell, and trade crypto on Gemini Exchange. One reason why I wouldn't recommend Gemini Exchange for trading, though, is because their trading fees are kind of outrageous. I mean, if you look at this site, which goes over the trading fees of Gemini, any order amount over $10 has a $1 fee. That's like 10%. And then anything between $10 and $25 is $1.50. $25 to $50, $2. $50 to $200, $3. And then if it's over $200, it's 1.5%. If you remember correctly from Binance Exchange, that fee was 0.075% with the Binance token coins. So that is quite a big difference. So again, for the purpose of this course, we will be using Coinbase and Coinbase Pro as a means to buy your cryptocurrency. And as for trading, I would be using Binance or Binance US. Alright, so now that we have covered all the different types of exchanges you can be using, as well as the advantages and disadvantages of each exchange and the restrictions, let's go over in the next video lesson how you can buy cryptocurrency on Coinbase. Alright, so let's go over how you first set up your Coinbase account and purchase your first crypto. So first thing you do is go to coinbase.com and then you click sign up. And you enter your name, and I'm just going to use one of my emails. Alright, so after you set up your account, you're going to have to verify your email. So after having your email verified, you would then just have to set up your phone number. Okay, so you enter your phone number, get sent a text code, enter that text code, and then submit. After that, you would have to verify your identity. Because I'm from New York State, I would need to enter additional information. So finally, after you've created your account, you can just add a new payment method. As you can see, there are many options to buy crypto from. So even after linking my bank account and trying to buy some crypto, you would need to submit an ID because the verification process for Coinbase is pretty thorough. You would have to submit your photos for additional verification. Alright, so after verifying your identity, you're ready to buy some Bitcoin. So let's go ahead and press the buy Bitcoin button here. So let's just buy 50 just to test it. Preview buy now. Okay, let's go. Alright, we bought some Bitcoin. So the thing about Coinbase is that when you buy your crypto, yes, you could trade on Coinbase or Coinbase Pro. You can trade the Bitcoin, but if you were to send your Bitcoin out of your wallet, for your first transaction, you would have to wait 7 business days. So make sure you are able to plan ahead, you know. Make sure you understand once you buy Bitcoin off of Coinbase, you would need to wait a long time before sending it out to another exchange for you to trade your crypto on. So let's just take a look around Coinbase, and you can see there are things like your portfolio feature, which tracks how much Bitcoin you have, and then you can look at the list of crypto that is available for you to trade, which is about 50 or so coins, which isn't bad actually. So then here in this tab you would be able to see the different staking and yielding rewards. So basically the percentage they're telling you is how much you can get per year if you keep a minimum amount of this crypto on the exchange. Additionally, on this rewards page, you would be able to invite friends to create accounts, and then if they buy crypto from Coinbase.com, you would get rewards for doing so. So another thing is, if you want more trading options, once you created and verified your account on Coinbase, you can just log in with the same account on Coinbase Pro. So once you go on Coinbase Pro, you can click over here and then you can see all the different trading options. If I remember correctly, there are 58 coins you can trade on Coinbase Pro. So there are plenty of opportunities for you to right off the bat after buying your cryptocurrency to just trade it for a different coin. But obviously I have a different cryptocurrency exchange that I use and that I highly recommend other people to use for trading cryptocurrency. And that crypto exchange is called Binance, or for USA residents, Binance US. So this part is going to be very important. After you set up everything, you want to make your Coinbase account as secure as possible. So what you would have to do is you would have to go to the right hand side of your dashboard, click on your name, and then go to settings. After you go to settings, go to security. So here you would be able to see the phone number attached to your account. In order to secure your account even more, you would want to add an authenticator. So go over here and then click select. And then you would be prompted to verify with your SMS code. So after that's done, you would have to go to your app store and then search the Google Authenticator. Right, so after you downloaded your Google Authenticator, you would see this. You would then have to press the plus sign on the Authenticator app and then go to scan barcode. And then on your screen, as you can see, there's a QR code which you scan. So I just scanned it, and then I scroll all the way down on my Authenticator app and I see a code that refreshes every 30 or so seconds. So I enter that code and then I click enable, and there you go. Your authenticator has been enabled for your Coinbase account. So what this means is whenever you log in, on top of getting an SMS code, you would have to go to your authenticator app and then enter the PIN code on that authenticator app. Alright, so what if I want to make my Coinbase account even more secure? You would have to select the security key option over here, and then you would have to enter your Google Authenticator code now. Now what security keys are physical USB dongles that kind of look like this, right? So if you wanted to set up an additional security measure on your Coinbase, you would need to buy that somewhere and then you would set it up. So just to go over a few more things, you would be able to see all the activity on this tab over here of your account. You would be able to see what device logged into your account as well as the IP address, so you can see the location of the device that logged onto your Coinbase account and exactly when. Additionally, if there are changes in the device or location of your device that logs onto your Coinbase account, Coinbase will send you an email notifying you of that. Also, if these base limitations are not enough for you, like bank transfers of $1,000 a day or PayPal withdrawals of $25,000 a day, you can have the option of increasing your limits, which would require you to enter more information, which would require Coinbase to verify things like your address by submitting a utility bill and more. So in order to receive Bitcoin on your Coinbase wallet, you would have to go to crypto addresses, right? Like over here. And then I just created a new Bitcoin address just recently. But if you wanted to create a new Bitcoin address, you would just click create new address right over here. And now I have 2 Bitcoin addresses for my Coinbase account. So if I were to send Bitcoins to my Coinbase Bitcoin wallet, I would click over here and then I would click receive. Then now, as you can see, the address I just created is right over here. So I can copy and paste, and then I'll tell my friend or whoever I'm buying from, here is my address, here is where you send the Bitcoin. And that's it. So that pretty much wraps it up for how to first create your account on Coinbase, how to go through the verification process on Coinbase, how to completely secure your Coinbase account. So now that that's all covered, let's move on to my favorite cryptocurrency exchange for trading, which is Binance. So just hop on to the next video lesson because you do not want to miss this. So welcome to Binance, or if you're a resident or if you're American, you would be using Binance US. So generally there are differences between Binance and Binance US. For instance, going on CoinMarketCap, as you can see, the first difference is that Binance has 358 cryptocurrency coins that you can trade with. On the other hand, Binance US unfortunately only has 54. Not only that, but Binance offers different options for trading, such as futures trading, options trading, and leveraged tokens. On the other hand, Binance US does not offer those. Now, Binance US is pretty intuitive and there's not that many options. So if you're outside of the US, you would be able to use the fully featured Binance exchange, and that is what I will be covering in this video lesson. So if you're not an American citizen, then you would be able to use Binance.com. And for those of you who are, then this video lesson will be covering all the different types of features that you have available to use on Binance.com. But don't worry, if you're a US citizen and you want access to as many altcoins as Binance.com and as many trading features as Binance.com, in this same video lesson I will be going over another great cryptocurrency exchange called Kucoin.com. So let's just go over Binance.com. As you can see over here, these are the ways you would be able to buy cryptocurrency. You can just use bank deposit, credit, debit cards, or other forms of payment. And then here on the home page, you would be able to see the markets. So if you click markets, you can see all the different coins that are being traded. Now, currently it's on BNB pairing, so you could always have the choice of changing that. So if you choose BTC markets, what this means is that these are coins which you can trade for using Bitcoin. And then if you click here, alts, these are coins which you can trade for using other altcoins. And if you click over here, fiat markets, this is the list of coins you can trade using USDT, which is essentially fiat currency, right? USD. It's a token that is one-to-one backed by USD. For every 1 USDT is 1 USD. As you can see, another fiat pairing is BUSD, which is backed by 1 USD as well. Now you can click and filter by the 24-hour change if you want to see the top gainers. Also, you would be able to click it again to see, or click it twice again to see the worst performing crypto coins. So let's say you want to fund your Binance cryptocurrency wallet with its first Bitcoin, right? So the first thing you would be able to do, want to do is go to wallets and then go to overview. So this is your wallet overview, and then you would click on deposit. So you have the option of depositing cash, crypto, or buying crypto. First, you would just click on deposit crypto, and then it's already created for you. This wallet address is already available to you. Make sure if you're depositing Bitcoin that you're depositing to your Bitcoin wallet address, right? If you want to deposit Ethereum, then make sure you select your Ethereum wallet address. Generally, like I said before, every crypto has its own unique alphanumerical string of characters. So even though you won't be at risk of losing your crypto if you choose the wrong cryptocurrency, it's just going to be a little messy and cause you to lose some time. Alright, so now that you have your Bitcoin wallet address, right, you would just copy your address, and then let's go back to Coinbase where we bought our first crypto, right, our first $50 in Bitcoin. So then you would go to send and receive on the top right, and then, well, for now I'm just going to send all, and then you're just going to paste your Bitcoin wallet address that you copied from Binance, and then click continue. Okay, so at the moment I can't send my Bitcoin because if you bought Bitcoin on Coinbase, you would have to wait 7 business days, right, before you can send it. And apparently there's a minimum amount you have to send, so the $1 something that I received from Bitcoin rising in price, I can't send yet. But after those 7 days, you would be able to send Bitcoins from your Coinbase wallet to your Binance wallet so you can start trading all those juicy altcoins. So it seems really confusing at first, but slowly the more you look at it, the more you'll understand, right? So if you look at these coins, you would be able to see, like on the yellow text, there's something that says 5x, 3x, 3x, 3x. This is how much you would be able to trade on margin for that coin. So basically, as you can see, you have the option of trading 3x margin for Bitcoin here if you put some Bitcoin into this wallet by clicking transfer, and if you transfer from your base or fiat and spot wallet into this cross margin wallet, you would be able to have the option of borrowing 3x of your Bitcoin amount in that wallet. So if you wanted to trade 10x, you would transfer into the isolated margin or 10x wallet. So that is why I love Binance. You know, you can trade on margin. So something to keep in mind about margins trading. As a beginner that's just getting started, we highly recommend not to use this feature yet because it is easy to lose your money. If you decide to go into the trade and the trade does not go your way, trading on leverage makes your losses hit harder. And as a beginner trader, you're probably trying to navigate through the waters, right? You're trying to learn and improve on trading strategies. That's why every major stock platform offers you the option of paper trading, right? You want to create and apply tested strategies to see if they work first before putting large amounts of money into every trade. So if you're a beginner, it's best to start with the funds you have on you now. But if you're interested in learning more, we will definitely be covering that at the end of this course as well as in our bonus materials. So make sure to follow their latest announcements because this is really important. This is a way you can tell which coins are going to be listed on the exchange. There's also a way to tell you which coin will be listed on the futures perpetual trading system. Also, it has promotions for staking coins or just keeping coins and tokens on the exchange. For example, looking at this announcement post, wow, if you buy Philcoin, you would be able to get rates of up to 40% annually if you decide to lock the coin, and to tell you ways to lock it. So basically, by following their announcements, you would have a lot of opportunities to act on trades. So if you decide you want to secure your Binance account even more, these are the options. Again, it's similar to Coinbase, right? You would have the option to turn on a Google authentication. You also would be able to include SMS authentication and email address verification. So whenever you take an action like withdrawing coins or signing into Binance, you would have to go through these 3 processes before you can do that action. Also, as you can see here, Binance has a really powerful referral system. If you invite friends, you would be able to earn commission on their trading fees. In fact, you would be able to earn up to 40% commission on all the trading fees your friend makes. That's actually a lot of dough that can add up really quickly. So now that we have covered the great marvel of Binance Exchange, for those of you who are looking for a similar exchange with as many capabilities and even more, as well as access to a lot of different altcoins, let's do an overview of Kucoin Exchange. So welcome to Kucoin Exchange. So some things to notice is that it's really similar to Binance Exchange. Honestly, Kucoin Exchange offers as many features as Binance Exchange and even more. So let me go over a few of the differences between Kucoin and Binance Exchange. So as of now, Binance supports 358 different altcoins, while Kucoin supports 315. Now that number constantly changes, and like a month or two ago, they were both around at 400 different coins actually. So that always constantly changes. Another important thing to notice is the maker and taker fees, right? For Kucoin, it's the same. The base maker and taker fee is both at 0.1%, but the difference is the discount on the tokens, right? So whereas Binance token, if you have Binance tokens in your wallet as you exchange, you would be able to save 25% on trading fees, right? But for Kucoin, that's only 20% if you have KCS tokens, which is that exchange's own token. And you would be able to toggle that in the trading exchange. So overall, it's not too much of a difference. 5% of 0.1%. So if we look through the overview of Kucoin, you would be able to have the option to buy crypto with a credit or debit card, as well as P2P, which means from other people. So this is where people can post buying or selling listings for Bitcoin or other currencies like USDT. So when you click trade, this is how Kucoin Exchange looks like. If you go down over here and check this box, you would be able to pay a 20% discount by having KCS tokens. Additionally, if you click over here, you can see all the different types of coin pairings you can trade with Bitcoin. If you click here, there's all the different pairings with KCS token, and then alts, and then USDT is right over here. And just similar to Binance, if you click on over here, you can see the biggest losers of the day, right? And then if you click again, you can see the biggest winners. Also, if you notice the 10x next to these coins, right, again, that means how much margin you can take on that coin. In order to trade on margin, you would have to transfer from your main account into the margin account. Also, you would have to click this tab, and then you would be able to see how much debt ratio you're taking, as well as how much margin percentage you could take. So if you want to get started and send some crypto into your wallet on Kucoin Exchange, you would have to go to main account, and then you would have to search for most likely BTC, right? And then you would have to click deposit. And then you would see your Bitcoin address over here, and you just copy it, and then from the other exchange or your friend, just give them this Bitcoin address, and then you would be able to send your Bitcoin to this wallet address on Kucoin Exchange. So thank you guys so much for joining me in module 2, where I went over the different types of cryptocurrency wallets that are available, as well as the different types of cryptocurrency exchanges you can buy and trade crypto on. Most importantly, we talked about the best ways to secure your cryptocurrency, as well as how to set up and buy your first crypto on Coinbase, and going over the really cool features of Kucoin and Binance. So for the next video module, I suggest you to pay very close attention, because I'll be sharing with you my proven and secret strategies that I use to find winning 10x cryptocurrency coins. I'll be going over where to find these coins. I would be going over why I think they would explode in the near future. Then I'll be going over a little more on how to navigate through the exchanges, right? How to exchange your cryptocurrency around. And I'll be reviewing the important mindsets you would need to have to be a successful cryptocurrency trader. So I'll see you guys in the next video module. So welcome to the bonus materials portion of the course. In this section, I'll be covering some of the features I haven't covered in the basic course. So if you're up for the challenge, I'll be going over things like futures trading, vanilla options, leverage tokens, trading bots on Kucoin. All these things will certainly give you an edge when you're trading crypto. So another really great thing about Binance is that you would have the option of trading futures. So this is futures, or as you can see, all these altcoins and they're perpetual, all these altcoins perpetually. So with futures, you have the option of borrowing up to 125 times margin. Now, one thing to notice is that you have a maximum borrowing amount for each different leverage amount you're borrowing. See, if you try to borrow 125x margin, the most you can trade at is a 50,000 USD position. Another thing to remember about margin is that there is something called a liquidation price. If the price you bought the coin at currently goes over that liquidation price, your entire position gets wiped out. So that's why if you borrow on too high of a leverage, your liquidation price would be too close to your entry price. So if the price of Bitcoin, for instance, moves like 1 or 0.5%, it might trigger that liquidation price and you might just lose everything. So those are the risks involved with futures trading. One really cool feature about futures trading is that you would be able to short using futures, as you can see over here. So one thing I have to warn you about, in addition to the liquidation price, trading futures is very risky because just by entering the trade, you might be down 5% already. Because remember, when you're trading on margin, you would have to pay that amount in trading fees. So for instance, if you're trading 25x, right? And then you're trading 1 Bitcoin, your trading fee is no longer 0.075% only. You would have to multiply that by 20. So some quick maths, you are entering that position down 1.5%, assuming you get a favorable entry point. Most of the trades I take with margins trading, I'm already down 2% when I enter a trade. So that's something you really have to be cognizant about. So another very cool and recent feature of Binance is vanilla options. So this works just like stock options, right? You would be able to purchase a contract of buying or selling this amount of Bitcoin. So for instance, if you think the price of Bitcoin will be above 58,000 in 6 days and 20 hours, you would be able to buy one of these contracts or a call option over here. Personally, however, I haven't messed around with it too much, and right now it doesn't look like it operates as similar to regular stock options, so I wouldn't mess with vanilla options yet on Binance. So let's look at something called Binance leverage tokens. So basically, here are a list of tokens which you can buy on leverage without having the risk of liquidation. So all these coins, as you can see, it has something called a real leverage. So basically, for example, whenever InchUp goes up 1%, it actually goes up 2.942%. So unfortunately, you're only limited to these like 10 or 15 tokens which follow the real token. So this is a great way to buy on margin without the risk of liquidation. So it's basically a less risky way of getting more for your money on a trade. So the last feature is something called battling, or just competing with other people to see who trades the best and has the longest streak of winning trades. I usually don't mess around with this either, but if you're into it, Binance has so many different contests and competitions and airdrops and stuff like that. Additionally, similar to Binance, there is a futures option, right? You would be able to trade on leverage from 1 to 100x, and then you would have the option of going long or going short on your positions. Looks like there's an added feature, but over here in Kucoin, you would be able to see the long and short ratio of the buyers and sellers in the market at the moment in Kucoin Exchange, which is kind of cool. So one of the features of Kucoin that separates itself from Binance Exchange is that they actually have the option of offering you trading bots. So in order to access this feature, you would need to download the Kucoin mobile app and then you would have to basically go through the app. And then after downloading the app, you would be able to see different trading bot strategies that are available and how people performed with those strategies. As you can see here, there's actually a rankings list of how well bots performed and how long they were running for. So this is actually crazy. So someone actually made 12,800% in APR yearly, and that was in 3 days. So this way you would be able to test different bot trading strategies and find one that works for you. So that is really exciting, actually. Welcome guys, congratulations on making it this far into the course. Welcome to module 3. In this section of the course, we will be going over how to really start trading our cryptocurrency coins. The purpose of this course is to help you guys develop a good understanding of the basics of trading, as well as to learn the proven cryptocurrency trading strategies and mindsets that have helped experienced traders and some of our students earn 20, 40, even 400% returns on their trades consistently. So the outline of module 3 goes as follows. In the first section of module 3, we will be talking about things to remember before you start trading. There are a lot of things you still have to do before you start trading your first cryptocurrency coins. There are certain settings that you'll need to implement to optimize your trading profitability, and there are ways to lower your fee costs. So that's very important to remember. So the second thing we'll go over in this course outline is the trading overview. So in this second section, we will be helping you guys get familiar with the trading dashboard. The fastest way you'll be able to learn these concepts of trading is by familiarizing yourself with where everything is. So moving on to the third section we'll cover in this module is what to look out for when buying cryptocurrency coins. So in this section, we'll be going over a little about how to value a cryptocurrency coin and where you would be able to find the next big winners. This section will be very important when it comes to becoming a better cryptocurrency trader. The fourth section of this course is going to be on how to cash out your cryptocurrency. I remember when I was starting out trading crypto in 2017, people were scared they couldn't cash out their digital assets. But now, thanks to the many features and different exchanges, there are a lot of ways you can turn your crypto profits into money you can use to pay your rent or buy groceries or even buy a car. So the fifth section of this module will be going over mistakes to avoid. So this very important section of this module, we will be talking about managing emotions, reviewing the different types of mindsets I talked about in module 1, as well as going over the trading strategies that profitable cryptocurrency traders implement consistently. Alright, please join me in the next video where I'll be talking about things to remember before you start trading. So thanks for joining me in this very important video lesson. We're going to be going over the critical trading foundations. So these are the things you must do in order to improve your trading experience. Now the first thing on the list that you must do is the KYC, or know your customer. Every exchange requires this, and there are certain benefits that come from doing this, right? You would be able to increase your withdrawal and deposit amounts into your cryptocurrency exchange. You would also be able to increase your trading limits. Now, you wouldn't need this for an exchange for, say, Binance, right? Every exchange offers different limits that can be lifted if you do their KYC. So essentially what a KYC is that it stands for Know Your Customer. It's a process that banks and financial institutions have used to gather data to identify their customers. So sometimes you would have to submit pictures of your driver's license or passport. You may have to enter your social security number. There are instances where I took pictures of myself in a selfie with my passport. Going down the verification levels, there may be a need to verify your address with like a utility bill too. So basically, I'm just touching on this lightly because all the exchanges require this type of information. So you would have to be comfortable with giving it out if you want to increase your account withdrawal or transfer limits. Also, before you get started trading, you have to remember to buy some BNB tokens, or if you're on Kucoin exchange, some Kucoin tokens. The reason being is that these exchange fees and trading volumes can really add up. So if you buy BNB token and it's in your wallet, you can just toggle this over here and you can turn on using BNB token for your trading fee. That is a savings of 25% on top of your already 0.1% taker and maker trading fees. So just to put into perspective how much you can save, say you have $10,000 and you enter a trade, you would be paying 0.1%, right, in taker fees. So when you take the trade, you would pay $10. If you close the trade and sell your cryptocurrency coins, you would have to pay another $10. If you have BNB token in your wallet, however, you would be saving $250 on the taker and the maker fees. So basically, when you take the trade, you save $250, and when you exit the trade, you also save another $250. So you'd be saving a total of $5 entering and exiting this trade. Now, it doesn't seem like much, but you really would be surprised how much in trading volume you can go through in your account. This would be especially apparent if you trade on margin, like I did with futures in the last 30 days. We'll talk about margin trading later on in the course, but it's when you trade with 10x or 20x or 50x the amount of money you have on you right now, which is incredibly risky. Alright, so let's try to figure out how to do this for Binance Exchange, right? How do we start using BNB to pay trading fees? So first you go to the top right hand corner, you go to your email right next to VIP0, click on it, and then you see this dashboard of your portfolio, right? So the second thing you do is you scroll all the way down, and then you can see your trading fee level VIP0, right? You can see clearly what your maker fees and your taker fees for every trade is. It's about 0.1%. So if you wanted to start using BNB to pay for fees, which is a 25% discount, all you have to do is click right over here. And voila, it's toggled. So now you would enjoy 0.075% for every trade you make. But on that condition, you have to have BNB token in your account. So you would just go all the way back to trade or convert. And then let's say you have USDT on you right now, right? You would buy or trade for some BNB tokens. So you would have to make sure you have some BNB balance in your wallet or account all the time. So let's say, for instance, you wanted to use KCS tokens to offset how much fees you have to pay per trade, right? Well, the first thing you would do is you would go to find KCS token, right? So you can see that there is a Bitcoin pairing and a USDT pairing. So then you would go to the USDT pairing, and then you would click over here, and then you're like, all right, let's just buy one or two, right? Let's just buy like 5. Okay, so and then you click buy KCS. So now, as you can see, I have 6 KCS tokens in my account. So now that I have KCS tokens in my wallet, I would just check this box on the right hand side. Says KCS pay fees, right? After enabling KCS pay fees, you will enjoy another 20% discount on the basis of the rate you have. So now every trade I take is going to be 20% of the taker maker fees on Kucoin. So the fees are about 0.1%. It becomes then 0.08%. So that's a pretty good deal to me. So the third thing to remember when you're trading is that there are times when things go wrong, and support is always there for you. For instance, if you're on Binance, all you have to do is scroll all the way down, and then in the footer of the site, you can support section over here. So if you need help with anything, you can go to the support center, or you can submit a request. Exchanges are usually not perfect, and I've had many instances where I had trouble transferring cryptocurrency from one wallet to another on the same exchange, or when I had trouble buying a certain cryptocurrency coin. So all you have to do is select your question, and chances are you would just talk to an automated support unless you want to submit a ticket for your problem. So now that we have touched upon lightly the things you have to remember before you start trading, let's go into the trading overview and how to really set up your trading dashboard. This next section is very important because it familiarizes yourself with the trading dashboard. I'll see you guys there. So welcome to the trading overview. Guys, you will need to pay very close attention to this next section. So we'll be mostly focusing on the Binance trading dashboard. I'll be going over the fast convert method, how to place trades, basic trading dashboard overview, transferring your crypto to wallets on different exchanges, and how to exchange between cryptocurrencies. So let's get started. So welcome back. We are on Binance.com right now, and I will be going over the fast convert. So if you want to exchange your USDT to Bitcoin, or if you want to exchange your Bitcoin for Ethereum, this is a very fast and easy way to do it. So just put your cursor over the trade tab and then choose the first option where it says convert. So then you get into this where you can see the other options of currencies you can convert your Bitcoin into. Now there are definitely less options than when you're trading, but you wouldn't have to worry about things like whether or not your order will fill. But in a matter of seconds, you can change your Bitcoin to Ethereum. Now that that's covered, let's go into the trading dashboard. So as you can see, it looks really intimidating, but there are a few settings we have to go over. So the first thing I would have to, the first thing to note is that you can change the color of the dashboard. So if you prefer the dark tone, then you can change it into that. If you prefer it being white, maybe it's easier to see, you can change it in that. Or also, if you would like different colors for your candlesticks, right, you can just go over here and then you can change it to traditional. But for me personally, I do prefer fresh. Also, there's a really cool feature where you can see multiple charts at once. So if you're really into trading and you want to monitor different coins at the same time, then you can do this just by clicking on that setting. As you can see, if you go back to order mode, you can go into the pro setting, and voila, it makes the chart bigger. It makes the order book clear, and you can just place your order on the right hand side over here. Now, if you go into full screen mode, everything but the buying and selling buttons are larger. So just for simplicity, we're just going to stick with classic mode. So now that we're back in classic mode, the trading dashboard looks very intimidating, right? There's a lot going on. Don't worry though, we'll be going over step by step how this works. So the first thing you notice right on the left hand side is this list of red and green values, right? What this is on the left hand side is where you can see other people placing orders, right? So this is what you call an order book. You can clearly see everyone else and what orders they place. So say for instance, you look over here, you can see people placing orders for selling Bitcoin at 55,805, right? $50,000 worth. If you look on the bottom, you can see a lot of orders where people are trying to buy the Bitcoin. So like over here, you already see there's an order for 55,757, right? If you look closely, how full the red or green bars indicates how big that order is. So these orders are big, they're 1 Bitcoin, 4 Bitcoin, but these smaller ones, they're half full or smaller. So I mean, it's just a faster way of seeing the book orders. Some ways that are important that you can use to implement this feature is that if you think there is a psychological number value that's coming up for the price of Bitcoin, for instance, 60,000, right? You would be able to look further into the order book. So for example, if you think there is a huge selling wall at like 56,000 USD per Bitcoin, right? You can actually look in the order book and you can see, wow, yeah, there is someone trying to sell Bitcoin at 56,000 USD, right? And they're trying to sell 4.5 Bitcoins or $250,000. So as a trader, this tells you, okay, maybe this will be a big selling wall, right? Maybe it'll take some time for traders to get through this price point. So maybe at this point, Bitcoin might fall even more in the short term. So this feature is actually very useful. Now let's take a look over here, right? You see the chart, and below here is where you can buy or sell the cryptocurrency coin you're on. So as we covered before, Binance had 3 different wallet options, so you wouldn't have to worry about cross 3x or isolated 10x until we get to the part where we're trading on margin. So don't worry about that for now. Let's talk about limit orders, right? So limit orders are orders where you can actually set a certain price value to buy at, and when it reaches that value, it executes the trade. So for example, it looks like the price of Bitcoin might be a little too high for me right now, right? So instead of $55,780, I can actually set a price point of, let's say, $55,000, right? We can actually set an order where we can buy a set amount of Bitcoin for 55,000 USD. So once we set the order, when that value falls to 55,000, it automatically executes and we buy Bitcoin at that price, and we don't even have to look at it. So the same goes for selling, right? If you think the price of Bitcoin right now is too cheap and you have Bitcoin, you can actually set it to 56,000 USD, right? And then this bar will be how much of your portfolio you're selling right now. Now an order has been placed, so whenever the price of Bitcoin reaches 56,000, I will automatically sell this percentage of my position away. Now this is different from what a market order is. So when you click on market order, you are buying and selling at the current price of Bitcoin right now. So that's why you don't have an option to input the price you're buying at. When you execute this order, you'll be buying at the market price. So if you want to buy, let's say 30% of your portfolio, you can put that at the bar and then you just click buy. That's it. Now if I had to balance my account right now, I would be able to place an order. And then as you can see, it would execute at 55,900 something USD per Bitcoin. Same goes for selling. Now the third tab is very important. It's the stop limit or the stop loss order. So essentially what stop limit orders are basically a more complicated limit order, right? So let's say for example you set a stop price of 55,800 for a Bitcoin, right? And let's say for a limit price you set 55,853. So what happens is when Bitcoin reaches that stop price of 55,800, it triggers, right? So after it triggers, the limit order is now in place. The limit order that I just set for 55,853 USD. So let's say you have Bitcoin, right? And you're trying to place a stop limit order. Let's say you want to sell your Bitcoin for the best price possible. So let's say you bullish on Bitcoin, so you don't want a stop loss order too far away from the current price right now. So let's say you don't think Bitcoin will go under 54,000 USDT, right? So in the stop section, you put 54,000 USD. And then for the limit, let's just put 53,700, right? So what the stop limit order is that once the price of Bitcoin reaches 54,000, it triggers a limit order of 53,700 USD. So if the price reaches 53,700 USD after that stop limit order was triggered, then it would fill. If, however, it never reaches 53,700 USDT, it would never execute. The purpose of a stop limit order is for whenever there are periods of high volatility and there may be price jumps that completely skip over a certain price point, So it's a more specific limit order, which is very important when it comes to trading strategies for cryptocurrency. So now that we have covered the order book and the buying and selling section of your trading overview, let's go over into the graph. So as you can see, the graph has green bars and red bars. We will go over that later, but the basic understanding is that on the top here you can set the time frame. So what the time frame is that it's how long you want each bar of this candle of the graph to be. So for example, you want every candle to indicate 30 minutes. This is the most common time frame, so let's set it to 30 minutes, and now we get a different picture of how the graph looks like, right? So remember, each bar is 30 minutes, so the green indicates that the bar closed higher than the previous bar. So what traders would do is that they would use these trading indicators to determine whether or not there's a strong bullish or bearish trend. And now if you're a really short-term day trader, or if you're trying to find an entry point for your position, you could set the candle bars to a lower time frame for, let's say, 1 minute. Now see how different the chart looks now. Usually when it's 1 minute, there are no set patterns, and it just goes up, down, and it's kind of unpredictable. Now that we have seen the 30-minute and the 1 minute charts, let's just look at the 1 day, right? So now this is a whole completely different picture. Every candle bar is 1 day, and as you have noted, Bitcoin made an incredible run since the beginning of last winter, right? As you can see, in the beginning of the year, it started at 23,000, and now it's at 55,800 something. Couple more things to go over about the trading graph is that if you look on the bottom, this is the trading volume. So what the trading volume indicates is how many people bought Bitcoin in this time frame, right? So the longer the bar you see, the more volume of Bitcoin was transacted in that 1 day candle. When you see the shorter bars, that means less Bitcoin was exchanged in this time frame. It is a good indicator of how overbought or how oversold Bitcoin is in this trading period. So now if you turn your attention to these 3 lines that you see on the graph, right? This teal, this magenta, and this pink line. These are the lines that indicate the moving averages. I will not be covering moving averages in this section of the course, but later on, I will really go into depth about moving averages and other technical indicators that will help you master cryptocurrency trading and trading in general. This way, you can really hone and have profitable and consistent trading strategies. So finally, we get to the right-hand side of the trading setup. Over here, it's a nice little section where you can see all the other altcoins, and you can filter by biggest gainers or biggest losers. So it's just a good way to track what's moving. If you see on the section below it, you can see market trades, right? So this is generally usually too fast for me to look at all the time, but it tells you what trades other people have filled. So maybe sometimes you would be able to see a big market order like 1 Bitcoin, 2 Bitcoin, or 5 Bitcoins. It's just a fast way of seeing what people are buying or selling, or if there's a large volume in buying or selling. Another thing to note that I haven't completely gone in depth with is that there are different coin pairings, right? So on Binance Exchange, there are many different ways to trade crypto. Say, for instance, you have Bitcoin, right? You can trade your Bitcoin by clicking on BTC markets and seeing which different cryptocurrency coins you can exchange for your Bitcoin. So if I wanted to buy some Dogecoin, right, that's been on fire, we would just go into and click Dogecoin BTC. And here you can buy and trade your Bitcoin for Dogecoin. Say, for instance, you have fiat or USDT, right? You can click that, and then you can see all the different options. You can trade your USDT for different cryptocurrency coins. If you have BNB coin, then you can go to BNB markets and you can trade and see which pairings you can trade your BNB tokens for. Generally, to simplify things, I mostly just focus on BTC and USDT. Especially USDT, right? That makes things a lot simpler. You can tell what tokens are rising or falling based on the dollar, right? That's as simple as it gets. If you go into BTC markets, however, you have to take into account the value of Bitcoin, right? So if the price of the token is going up, but Bitcoin is going up as well, that means the ETC BTC pairing over here, the change should be lower, right? It wouldn't be as high. To simplify things though, I usually stick with just USDT because, for example, if you take a look at ETC and Bitcoin pairing, right? In 24 hours, it says the change has been 48.63%, right? If we go into fiat markets and look at that with a USDT pairing, it's only 46.2%. So what this tells us is that even though the value of ETC has went up, the value of Bitcoin has also went down. That's why there's a bigger change for the ETC to BTC pairing. But just to keep things very, very simple, I just look at the USDT pairings. But some things to keep in mind is that there are certain pairings only available from Bitcoin, right? For example, like BCD token, which has risen 70% today. It's only available to buy and sell if you have Bitcoin available. So that pretty much wraps it up for this section of the module where I went over the trading dashboard overview. Now the next video section is something you really have to pay very close attention to, because this is where we start going into how we value cryptocurrency coins and how we find the next big winner. So welcome to this section of the course where I talk about what to look out for when you're buying your first crypto coins. So the first thing to note is that it is different from traditional stocks. If you have invested in stocks before, there are a lot of different factors to consider when you're trying to find a next big winner for cryptocurrency coins. As you might have noticed, you can't use things like balance sheets or income statements. There are probably not news of stock mergers, right? So what this tells you is that there are a lot fewer factors that you can look at, and that there are certain other factors in the cryptocurrency space which are weighed more when it comes to valuing cryptocurrency coins. So the first and most important factor when it comes to valuing cryptocurrency coins is its market cap, right? Let's just pull up coin market cap here over really quick. So over here, right, this is the bread and butter site. This is your most important resource. This is where you can look at the top coins by market cap. Clearly, Bitcoin is number one, and then number two is Ethereum. Surprisingly, number four is Dogecoin. But basically, you can scroll down this website, and then since it's filtered by market cap, you can see the smaller market cap coins. You can also go down to page 2. And in here, it looks like these are the coins with hundreds of millions in market cap. So like I said, so one thing to note is that usually the top market coins are less volatile, right? There are a lot more people holding those coins. There's a lot more money invested in the top market cap coins. Now let's say you go to the 5th page of coinmarketcap.com, right? You can see the market cap of these coins are hovering around $80 million to $100 million. Additionally, you can see that over the last 7 days, the prices of these coins went up exponentially more than the coins of a much higher market cap on the first page of coinmarketcap.com, right? If you go even deeper and down the pages to page 8 of coinmarketcap.com, look at that. See how much more volatile these coins are. There's something called Karma Coin apparently that skyrocketed 640% in the last 7 days. Ooh, one really important thing to note is that actually the volume of Karma Coin is $326, which is really important to note because this means this coin, this means that one person could have just bought the coin, like just put $300 and moved it by 600 or so percent. So these are coins you want to avoid. You want to be looking at coins with a couple million in volume. So I would be looking at HVN. I still wouldn't be looking at eBoost. So that brings us to the next metric which we use to value our cryptocurrency coins, which is upcoming events. And as I covered in the last section, and as I covered in this course so far, remember what other tool that was really useful for you to use? Yes, it's coinmarketcal.com. This is where you can see any coin and if they have any upcoming and important events going on. So like I briefly touched on in an earlier lesson, there are many different types of events you have to look out for when you're looking on coinmarketcal.com. So interesting events to me are token burnings. When the supply of a token is burned, the supply is essentially cut. So there are less tokens in circulation, which increases the price of the existing tokens. Another important event to look out for are any exchange listings. So when a obscure or really unknown coin not available to a lot of investors is listed on an exchange, say like Binance, which is able to connect you to a lot of new money or available investors, then that coin's price is obviously going to go up before the listing event and shortly right after. Also, a few other significant events are the mainnet launches or other DeFi tokens. I don't want to go too much into things like DeFi or mainnet launches at the moment, but I'll cover that later on in the course. I would also look out for possible news announcement events where certain coins host certain events for when they reveal big news about upcoming projects. So the best way I would use coinmarketcap.com is to use it in conjunction with coinmarketcap.com, right? By looking at upcoming events, I can forecast future coin prices. By going on coinmarketcap.com, I can check the market cap of this coin and see and predict whether or not it will be a small enough coin that will have drastic movement because of this news. Additionally, I can look at the price graphs and see whether or not this coin is already priced in, or basically what that means is whether or not the news event is already reflected in the price. So one thing that struck out to me when I was scrolling past CoinMarketCap is IOTA was having an AMA event or an Ask Me Anything event. So now I'm thinking I might consider buying some IOTA. As you can see on coinmarketcap.com, the price of IOTA actually slightly rose in anticipation of this news, right? People are thinking the same thing. They're thinking, what if something big is released by IOTA during this AMA event? So talking about the next really important factor when you're valuing a cryptocurrency coin is their use case, right? Are they being used in an impactful way at the moment? So for instance, when Chainlink partnered with Google for their own dApps or decentralized applications, the price of Chainlink skyrocketed, right? If you look on the graph of Chainlink, you can see when they announced the Google partnership, which was around the end of 2019, right? And then there were periods of consolidation. But as the news started becoming and getting more real and that people were seeing Chainlink was actually being used by Google, the price of the coin completely skyrocketed. It was at $3 and now today it's at 40 something dollars, which is insane. So another great example of a coin with powerful use case and why it rose in value is no other than Binance Coin, right? So as you can see, there was a huge spike in the beginning of February where Binance Coin was only at $40 and now it's at $600 something dollars, right? So what warranted this powerful growth in the coin, right? So in September of 2020, there was something called the introduction of the Binance Smart Chain. So it works similar to Ethereum and how Ethereum introduces decentralized applications on its platform using smart contracts, right? What the Binance Smart Chain does is that it allows the introduction of these same decentralized applications on its platform as well, right? So as you can see here, Binance Smart Chain will empower its users to build their decentralized apps and digital assets on one blockchain and take advantage of the fast trading to exchange on the other. So more and more dApps are building their products on Binance Smart Chain because of its fast block time and cheaper fees. So more and more dApps start building their products on Binance Smart Chain because of this. Now this is really important because at the same time there was something called DeFi. So what DeFi stands for is decentralized finance, right? They are decentralized financial applications running on the blockchain, which mirrors traditional banking and financial services. So basically what DeFi apps do is that they recreate these financial services without needing a third-party intermediary. So for example, DeFi tokens would enable people to be able to borrow and lend within a peer-to-peer network, or maybe take out insurance, without needing an institution, a bank, or a third-party intermediary. So overall, by utilizing the smart contracts on blockchains, these services become faster, cheaper, and more transparent. So as the hype for DeFi tokens grew and grew in the beginning of 2021, because of the Binance Smart Chain, more and more investors were interested in Binance token. This explains its explosion of growth since the beginning of 2021. So that's why use case is very important. You have to see what people are talking about, like what the new technology is, right? So DeFi tokens experienced a crazy amount of growth in the last few months, right? So the next thing we're going to be talking about, which is a very important factor in considering how a cryptocurrency coin is valued, is its availability on certain exchanges, right? So if you look here on coinmarketcap.com, there's a coin called Sora, which rose 42% in the last 7 days. That's very impressive. But in considering whether or not this coin has more room for growth, let's just look at what markets it's traded in, right? So it looks like the platforms where you can trade this coin is very limited, right? There's no Binance, there's no Kucoin, none of the big major exchanges. So that's why looking at this coin, even though it completely exploded, it might not be a good contender coin in the long run, right? Its growth is essentially capped by the same group of investors, right? Only people who use Uniswap and all the other swapping platforms. But once it is introduced to an exchange like Binance, there's this entire pool of investors, right? These investors, retail investors who don't want to go through the hurdle or hassle of learning how to swap their tokens from Ethereum to this token on Uniswap. So that is definitely something you should keep in mind. So a good example of such a token is actually SafeMoon. So SafeMoon token exploded before it was even listed on Binance Exchange, and it's kind of incredible. People actually took out the time and the effort to learn how to swap tokens on Uniswap from Ethereum to this token, and it's a kind of really complicated, kind of hard to learn process. Eventually, however, just last week, SafeMoon token was listed on an exchange called Gate.io, which is a fairly major exchange. So just because of that, the price exploded because of that. So SafeMoon token was more available to retail investors and new money, and that's why it's a good contender for future growth. If this coin was listed on Binance, for example, this would probably explode even more. If, for instance, it would ever be listed on Coinbase or Robinhood, this is going to be the Dogecoin times 10, maybe 100. This is the power of having a coin listed on major exchanges. It's probably the number one thing I look for when I value cryptocurrency coins. To go more in depth, this is probably the reason most of the crypto coins listed on Robinhood and Coinbase, like Ripple, Doge, or Ethereum Classic, this is the reason why they're exploding. If you notice, these coins are only listed on Coinbase and Robinhood, right? For instance, Dogecoin is listed on Robinhood and it rose, or it's probably skyrocketed at least 1,000% in the last 2 weeks. So is Ethereum Classic. It just rose 300% in the last 7 days. It probably rose 10x from the last month. I mean, these two tokens are only available on Robinhood.com, which is the exchange available to retail investors. That's why none of these other coins with a lot of potential, that's why they're not rising as fast, right? And then other coins like EOS, TRX, Chainlink, Ethereum, these coins are available on Coinbase Pro. So it's very powerful when a coin gets listed on major exchanges. So the most important thing about crypto is that there is always going to be a new hype or a new fad. You would have to monitor and follow different online communities like YouTube, Facebook, Reddit, Twitter to see what people are talking about, right? You should also be able to join certain Telegram or Discord groups about crypto. So this way you would be able to see what coins many of the users are talking about. Remember, I mentioned Moonshot Reddit, right? That's a really good resource to see what coin has the most upvotes and what is the most hyped. You can also use Twitter, right? You can look at the crypto hashtags. One little known but actually kind of reliable resource that I've used in the past 4 years to monitor winning cryptocurrency coins is actually 4chan Biz. So this community is kind of fluid, and you would have to look through the spam posts and the pretty ridiculous things that they post about. And usually it's kind of updated, right? It's like every minute there's a new post. In my 4 years of crypto trading, I've seen this online community successfully call out like 10x, 20x coins, right? You just have to be able to look past the shills or like posts where people obviously hype certain coins up. Let's go into the next video section where I talk about how you cash out your cryptocurrency. Welcome to how to cash out. So in this video section, I'll be talking about how you can withdraw your crypto, or the different ways you can use your crypto to buy certain things on different marketplaces. Having a good understanding of the different ways you can withdraw your crypto is really important, because this way you would, in the event of an emergency, you would be able to buy and sell your crypto quickly. So first thing we'll be talking about in this video section are P2P exchanges, which is peer-to-peer, right? So one notable example of a peer-to-peer exchange is Paxful.com. So as you can see here, Paxful.com has many different ways of where you can buy and sell your Bitcoin. So this is a marketplace where people like you and I can put a listing on, and we can buy or sell Bitcoin and other cryptocurrencies. So this is important because there are so many different payment methods. For example, if you go to payment methods here, you can check all the different types of payment methods. You can do Amazon gift card. You can actually sell your Bitcoin or buy your Bitcoin with Cash App. Cars, Chase Quick Pay, Etsy. There's more and more different types of payment methods every day. So say you have a balance in Target or Amazon gift cards and you want to buy Bitcoin, you can actually use that service here. You can actually convert your gift cards into crypto. One very important thing to note about this site is that sometimes the rates you'll be buying and selling Bitcoin at is not that attractive. Sometimes you would have to be paying 3% or 4% or maybe 5% more or less. Also, another important thing to note is that there are sometimes a lot of different scams that go on the site. So say for example, we filter the listing by Nigerian Naira, right, the currency, and we go to worldwide, we would see all these different types of listings, right? Now, these listings are saying you can get Bitcoin for 10% off, which I find it very hard to believe, right? These two are obviously scam listings, and it's tough because even 200 something feedback is kind of suspicious, right? As you can see, oh, they're new, so they're definitely scams, basically. If it's too good to be true, it's probably not true. This site is really useful if you have some cash on hand or in some other place and you just really want to buy crypto, right? This is how I started, was with cash on hand. I had about $17,000 on hand from my gigs and odd jobs, and what I did was I found someone on this site who was willing to sell me Bitcoin for cash on hand. So this site is amazing when you need to buy and sell crypto urgently. The second big website, in my opinion, is actually localbitcoins.com. Even though the layout doesn't look as sophisticated as Paxful, there are still a lot of credible traders on here, and also a lot of scams, but there are a lot of different ways you can buy crypto. As you can see, there's online offers. You can use cashier's checks, Payoneer. You can use Walmart to Walmart or WebMoney, WeChat. That's actually really useful. So the next point we'll be talking about are the things you can buy with your Bitcoin. So say you don't have the time to wait for your crypto to change into USD in your bank account, right, from your cryptocurrency exchange. What are there ways to use your Bitcoins to buy goods and services? Well, lucky for you, there are a lot of ways to buy goods and services with your Bitcoin. One such way is the website Overstock. Overstock is a home goods, furniture website, but they fully accept cryptocurrency. Another website where you can buy things with your cryptocurrency is actually Newegg.com. Newegg.com sells computer parts and electronics and a variety of other different things now. So you can buy laptops, computers, PCs, monitors, Xbox, PS5 using Bitcoin. Yes, that's right. Another great way to find, let's say, local businesses in your area that accept Bitcoin is by using coinmap.org. So it gives you a map of all the different ATMs, attractions, cafes, food, grocery, lodging, nightlife, shopping areas you can use that accept Bitcoin as one of the forms of payment. So let's say you live in Houston, right? If you zoom in, you can actually see, wow, there's a cafe that accepts Bitcoin. There is an ATM for crypto. You can see that there's actually an escape room that accepts cryptocurrency. That's kind of amazing. So another great website where you can just buy different types of gift cards with your cryptocurrency is Bitrefill. If you go to Bitrefill, you can see that there's practically every type of gift card from eBay, Amazon, Uber Eats, Deliveroo. So if you click on it, you can buy directly with Bitcoin, and as you can see, the price is listed in its sats. So the final way to cash out is very simple, right? You would just go on Coinbase.com and then you would attach your bank account. So we go to Coinbase.com, you can just go to the top right hand corner and then you select settings. And then you would have to select your payment methods, and then here you can see all your payment methods and just add a payment method. And then you just click on bank account, and then using the software here, Plaid, you can just select your bank account again, and then you would have to log into your bank account, and essentially that's all it takes to add your bank account, and now you can withdraw or deposit from your bank account on Coinbase. So if you have Bitcoin on another exchange, just send it to Coinbase and you can cash out like that. So in this next section of the course, I'll be talking about the very important mistakes you have to avoid when it comes to trading crypto. See you in the next video lesson. So welcome to the last section of this module. In this section, we'll be going over a review of the mindset we covered in the first module. We'll also be talking about how to manage our emotions while we trade, and just introduce another strategy that experienced traders usually use, which is called dollar cost averaging. Additionally, I'll also be talking about how important it is to set a stop loss. So what did we talk about in the first module about mindset? What we talked about is that we should not FOMO, or fear of missing out. There are always going to be opportunities in the cryptocurrency market where there's a coin that skyrockets. So instead of trying to chase that one coin, focus on the next coin. The next thing we talked about was taking risk, right? If you're confident a coin will rise a lot, it is still not worth the gamble to put 100% of your portfolio into that one coin. In doing so, you will only be chasing FOMO as well, right? If you went all in on one coin and then you miss out on another, you're going to be kicking yourself. So number 3 is probably going to be the most important thing, right? You need to have a game plan set before you even enter your trades. And then you will have to follow this game plan step by step. If you change the plan, you would be trading emotionally, which is the 5th part of the mindset. And the worst thing a trader could be doing is trading emotionally. I cannot tell you how many times I lost money just by revenge trading, right? Just by sticking with this one coin and buying it as it falls, right? Trying to catch a falling knife or chase the bottom, right? The more it falls, the more I tell myself, oh, it's going to go back up, but it never does. Do not be invested emotionally in any one coin. There are hundreds for you out there to trade. So the last important thing is to remember to learn from your mistakes, right? That is how you become a more experienced trader. When some things do not go your way, you have to remember about the things you learned from this course or the things you learned while you were trading, right? So now that we have reviewed the mindset again, let's just talk about why it's important to manage emotions, right? When you're trading, you would come across several emotions. One of these dangerous emotions is greed, right? You're going to have situations where you see a coin going up and you think, oh, it's going to go up even more. But the worst thing you can do is to FOMO, right? Is to chase the hype. You don't want to buy at the top. So you have to train yourself to buy at the dips, right? You know, whenever a coin goes up, there will definitely be pullbacks. So these are good entry positions. The second emotion you'll have to deal with when you're trading is anger, right? Like I said before, you're going to be invested emotionally in a coin and you don't want to do that. You don't want to keep trading this one coin just because you want to get revenge on it, just because you think it will go back up. So one good way I found of managing my emotions, right, is to trick myself into certain situations. For example, what I would do is to sell half my position when I'm up, right? So basically what this does is if the coin falls, right, I'll be happy because emotionally I know that I got some profit already. If the coin goes up, however, I'm also going to be happy because half of my position is still not sold yet. I'm still profiting from the next leg up of the price movement. So this kind of goes into the next point about dollar cost averaging, which is such an important technique that a lot of experienced traders use to trade, whether it's stocks, options, crypto, futures, anything. So generally it is used in a long-term strategy, but you can also apply it to a shorter time frame. Basically it is cutting up your investment money into different chunks or slices, right? And then investing it, for example, when a coin dips, or selling part of it when a coin goes up a little bit, right? For long-term positions, what it does, it lowers your cost basis overall. So what this does is it leads less of a loss in investment price if the coin falls, and you would be able to generate more gains on investments that rise in price. It essentially is the same thing I talked about when it comes to managing emotions. You would be able to avoid that risk to make counterproductive decisions out of greed or fear, such as buying more when prices rise, or panic selling when the price drops, right? So just to go into depth about the importance of dollar cost averaging, let's just take a look at this Bitcoin chart. So let's say you wanted to dollar cost average and buy Bitcoin every month, right? So you would be buying Bitcoin at these red dots over here. So yeah, you would be getting a fair price over here, but when the price is skyrocketing over here, you're not getting the best positions, right? But overall, if you do apply dollar cost averaging by buying every month or week, it looks like overall you're going to get a very good price for Bitcoin over here. So as you can tell, dollar cost averaging lowers your cost basis, and there were so many opportunities for you to buy it at such a high price that you can see how powerful dollar cost averaging is, right? How good your overall average cost for buying Bitcoin is compared to when, let's say, you were getting too hyped and you commit 100% of your position over here, right? Or maybe over here, or all these points over here. So again, here's another example of dollar cost averaging, right? Say you wanted to invest a lump sum of $800 at $10 per share or stock. So your entry point would then be $10, right? But let's say you wanted to instead choose to dollar cost average, where you would set aside $100 of investment cost per month. So you'd buy 10% of your portfolio at $10, and then another 10% at $20, and then another 10% at $7 and $15, and then $5 and $6 and $6.50, and finally at $10. So in this particular situation, you would have an average dollar cost of $8.16 per share versus the $10 initially of what you're going to go buy the stock at in the beginning. So this is why I can't reiterate enough why dollar cost averaging is so important. You do not have that hindsight of knowing that the price will drop or go up. Most people are working 9 to 5, right? Today, they do not have time to research about Bitcoin or other cryptocurrency coins. So they don't know whether or not they're getting good price for their share at a certain time. So it's better to allocate a percentage of your portfolio every month and commit it to Bitcoin and cryptocurrency. Of course, there are also downsides of dollar cost averaging, right? Say for instance you had $10,000, right? If you decide to commit over 10 months to purchase stock or crypto using those $1,000 every month, there would be a lost opportunity cost on the other $9,000 or $8,000 or $7,000 every month, right? But generally it is an excellent strategy for beginner traders. So by having game plan and contributing a set amount of your portfolio over a long period of time, you would be able to protect yourself from greater risk. So I'm glad I talked about having less risk. One of the most important things you should do when you get into every trade is to set a stop loss. Generally, I would set a stop loss of about 2 to 4%. This, of course, depends on the type of coin you're trading. Some of the lower market cap and more volatile coins, you would have to determine a better stop loss price. The reason you want to set a stop loss price is because you never know when there would be a flash crash, right? So I'm just going to go over how to set a stop loss. So we're looking at Cardano/BUSD. Let's say for instance we want to buy Cardano in this position, right? We think Cardano will go up from here. Now we're going to cover this in later lessons, but I'm going to use a technique called the support level, right? So by using a support level, I can use past history, right? I see that Cardano previously hit a point of $1.60 in this position here. So that is where I want to set my stop loss, right? All right, so how do you set up a stop loss? So to set up stop loss, the first thing I'm going to do is go all the way down here in the book orders, and then I can go to the third section, which is stop limit. So remember, I covered this briefly in this module. The first value you're going to input is going to be a trigger value. So this value is going to be a signal to set your limit order for your stop loss. So let's say I want to put this value as $1.62, right? So when Cardano reaches, if ever, $1.62, it will trigger my stop loss limit order. Now I'm going to set my stop loss limit order. So the next box under stop, you have limit. So in this box, I am going to put my stop loss number, which is $1.60. So then I'm going to choose what percent of my portfolio I want to sell off in the stop loss order, which should be around at least 50%. So then you can input the amount of coins you have, or you can use the slider, which allocates the percentage of your portfolio that you want to sell off. After that's all done, you just click sell, and then that's it. You have just placed a stop loss order. So in order to go over how important it is to manage your emotions and apply strategies while trading, let's look at this crypto coin, ATM/USDT pairing, right? So most likely you heard from a tweet or a friend or a pinged on your volume pinger that this coin went up this much over here, right? So you'll be interested in seeing where it goes later. So you're going to have to allocate 25% or 50% of your portfolio and buy in over here in hopes of it going up. So when you buy in over here, make sure that you set a stop loss, right? So you're going to be setting a stop loss of about roughly 5%, which is like $26.50 over here, right? So now that you have this stop loss, it tells you basically if the coin goes under this level, you sell immediately, right? So this would protect you from huge drop-offs, right? In case the coin goes in a different direction from when you hoped. So after it rises 20% all the way from $28 to $32 over here, you're probably like, all right, let's just sell like 25% of my portfolio, and then you do so. But then you see that it keeps going, right? It rises a little more over here. Since you have a strategy when you're trading, usually what people do is they buy at the break of the highs of these candles, right? So if the crypto coin goes past this level over here, then you're going to make your entry. So remember, when you re-enter this position though, you're setting a stop loss of, again, 3 or 5%, right? Over here, if it goes under this level, I'm selling because the trend of the trade is going to immediately change, right? So then luckily the trade goes in your favor and rises another 20% over here, right? So this is the level where you sell, right? So you came into this trade with a strategy, right? You knew you were going to sell 50% of your position whenever the price rises 20%, right? So you have to follow that plan. You cannot emotionally trade, right? If you were an emotional trader, you would have sold the coin over here. But instead, you went with your plan, right? When it rose 20%, you sold up there. So remember, why is it so important to dollar cost average, right? Why is it so important to sell off or buy portions of your portfolio? Well, this reduces your urge to FOMO, right? If it went up, you'll know that, hey, at least I sold part of my portfolio, right? And then if it went down a lot, you'll be kicking yourself and you'll be telling yourself, why didn't I sell, right? So in order to offset those emotions and to prevent emotional trading, you're going to do portions of your portfolio. You're going to try to apply some dollar cost averaging methods. So these are just some of the little things you can do, applying stop losses, dollar cost averaging, in order to trade with a plan and stop yourself from trading emotionally, which is the #1 reason why traders lose money. You would need to protect yourself in case anything goes wrong in a trade. So thank you guys for joining me in the mistakes to avoid lesson. In the next video lesson, we'll be going over different types of pump and dump coins and how you can avoid yourself from investing in scams. So welcome to this very important video lesson about scams, pumps and dumps, and hype coins you should avoid. So we already went over the different types of scams in an earlier video lesson, right? We talked about how there were Twitter profiles pretending to be famous people like Elon Musk, and how you should never click on one of those links or believe that there is some sort of giveaway if you commit and send it to a certain wallet address, right? So you should never ever send Bitcoin or cryptocurrency to another wallet address unless it's a well-known exchange. So the second thing to protect yourself was what? To remember not to trust emails, right? Never click on any email links. If you think it's from an exchange, like resetting your password or something like that, make sure it ends with the official email of that exchange, right? Make sure it's at Binance, at Kucoin. But overall, you should have the common sense to know that you should never be sending crypto to another address. You should never be prompted to enter a password for a reason other than logging into an exchange. You should definitely never send your private keys out to anybody. So how do you vet whether or not a coin is a pump and dump coin? Well, first and foremost, you should be using your handy dandy tool, CoinMarketCap, right? So you would be looking through lists of coins to try to figure out whether or not they're winners by looking at how much they pumped or their market caps, right? So you'll be looking through CoinMarketCap and then you see something called Box Token, right? It went up 86% in 1 week. That seems like such a good opportunity, right? Well, no, you have to look at the volume, right? Volume is so important. If you actually look at the volume of the coin, it's $2. So anyone could have pumped that coin. Imagine someone can just dump $100 in the coin and it will pump that coin 80 something percent because there's no other volume on that coin, right? That is something you should stay away from. If you do not see there is significant volume behind a coin like cat token, but even at 2 million something, I feel like, to me, that is not a significant amount of volume. I would feel more comfortable if it had 10 million or 20 million volume. If you go and look a little further into the cat token, in order to figure out whether or not it's a pump or dump or a scam coin, we'll be looking at what markets it's available to trade at, right? So most major cryptocurrency trading exchanges vet their coins, right? They don't want to list any scam coin, right? So it's important to know whether or not they're listed on a major exchange, right? I would feel more comfortable if cat token was listed on Binance or Kucoin already, but it is not. So that's another check for my list of maybe a scam token I don't want to invest in. So another great example of things you want to avoid are pump and dump Telegram groups, right? This is all too familiar. There are a bunch of cryptocurrency Telegram groups where people are saying, all right, here's a buy signal, guys, and here's a sell target, right? So these are basically just pump and dump groups, right? Organized groups where people have an inner ring. They might tell their friends, or they might buy a lot of the token themselves before telling a group of 100 or 1,000 followers to buy their token, right? So then when this token buys and pumps like 50%, they just immediately sell. And if you're unfortunate enough to get into this pump and dump coin, you may end up losing a lot of money. So generally, I wouldn't trust many Telegram groups either, right? There are groups on Telegram, WeChat. They're usually peddling these ML or multi-marketing scams or different types of tokens that are just pump and dumps. So it's very important to figure out where you're getting the information about these coins from, right? You have to understand and vet this information. You have to make sure it's from a trustworthy source, not just your mom's friend's WeChat group, right? Like I touched upon before lightly, my mom's friend had a WeChat group, right? And it was about one coin, and everyone was saying invest a certain amount of your money into one coin and then you'll make big profits, right? But there's the clause that you couldn't withdraw everything immediately. Stay away from things like that. There have been so many scams in the past, like BitConnect, where people were putting money into the platform, right? And they're getting constant returns, or they were getting promises their crypto growing, right? But there was a catch that you couldn't withdraw all your money. So this is how these scam websites work, right? They would promise you a 30% return every month or so, right? A ridiculous, outrageous return on investment. And then they would make it so that you couldn't withdraw everything right away, and this would attract new investors. And then they would use this new investors' money to pay off your allocated return for that month just to keep you happy, right? But eventually this snowballs so much where people can't withdraw their money, and then they just run off with everyone's money, right? So the people who couldn't withdraw all their funds lose their assets. So I cannot emphasize this enough, right? It is critical to always do research on your projects. You have to be looking through every coin subreddit. You have to be looking at its volume, at its market cap. You have to pull up every article you can find on the internet about that coin and whether or not that's a trustworthy source before you even think about investing into that one coin. So I am so glad you guys joined me for module 3. The next module is probably the most important. This is where I will be revealing my game-winning strategies. Remember, these are strategies that students and other experienced traders have used consistently to generate 40, 80, even 400% returns in cryptocurrency trading. See you guys in the next module. Hello and welcome, guys. You have made it. This is going to be the last and most important module of this course. This module is going to be about the profitable cryptocurrency trading strategies you guys have all been waiting for. Now here's a breakdown of all the lessons in this module. Alright, so the first lesson in this module is going to be an overview on the winning trading strategies. Remember, when you go into every trade, you should have a plan before you go into it. This lesson is going to be going over all the different trading strategies that you can take, as well as touching upon the mindsets that you have to remember all the time when you're trading cryptocurrency. The second lesson in this module is going to be going over the fundamentals of technical analysis. Now, you guys have probably seen the trading dashboard already, but you don't know what those candlesticks represent. You don't know what those lines mean, and you don't know how to use it to your full advantage to make profitable trades. So in that lesson, I'll be going over all of that. So the third lesson in this module is the one I am very excited about. It is the profitable secret indicators that I personally use and that many of my students have used for cryptocurrency trading. Now, a few of them you probably heard of already, but some of them most mainstream traders do not use, and when combined all together, it creates a very powerful and profitable trading strategy. So in the fourth lesson of this module, I will be going over the successful trader's workflow. Now, we already touched upon the tools and the places you can go to find potential crypto winners, right? But what I'll be going over is the beginning to the end of how you find potential trades. So I'll be going over the tools again of how you find crypto coins, but I'll be walking you guys through my analysis and how I actually vet for winning cryptocurrency trades. Now, in the 5th lesson of this module, I'll be going over the entry and exit strategies that every trader has to make. I'll be going over the technical analysis of how I enter trade, as well as the mindsets you really have to keep in mind when you're entering and exiting a trade. So in the 6th lesson of this module, I'll be talking about trading on news. So how does news really affect cryptocurrency coins? And can you utilize important news coming out for crypto coins into your trades? And the next lesson is going to be on the importance of market cycles. This is where we wrap up and forecast the future of cryptocurrency. What stage of the market are we in right now today? What are my thoughts about crypto in the near future? And finally, I'll be ending the course on the last lesson of congratulating you guys for finishing the course. Alright, so let's just jump right into winning trading strategies overview. Welcome guys to the winning trading strategies overview. Alright, so these are the broad strategies you have to keep in mind for every trade when you're trading cryptocurrency. This is really important because this is before you even get into the fundamentals of trading. This incorporates all the mindsets that we've learned, and we are going to reiterate the importance of trading with a plan when it comes to crypto. So these are the trading strategies that every trader has to make before they even take a trade. And in order to avoid trading emotionally, these are the steps every trader has to take in order to avoid losing on potential profits or making huge losses. So the first thing you have to do is determine what type of trader you are. So there are 3 types of different traders. The first type of trader is being a day trader. Now, what is a day trader? So a day trader is someone who, yeah, you guessed it, trades every day. Now it's important to remember the average time a day trader holds his or her positions. Sometimes a day trader holds a position for as little as 10 minutes. Other times he or she holds the position for hours. Now what this means is that for day traders, technical analysis is going to be so important. Because the time you hold the positions are so short, you wouldn't have to worry about potential news catalysts. So the bulk of your trading strategy revolves around entering and exiting based on technical indicators. So the second type of trader is what is called a swing trader. A swing trader is someone who holds their position for several hours to 2 or 3 days, or even 1 or 2 weeks. Generally, even in stocks, 1 to 2 weeks is how long the life cycle of a hype of a stock or commodity is. For instance, let's look back at GameStop, right? So if we look at the chart of GameStop, remember when it was getting all hyped? That was January 21st, right? Right before this pump over here. And as you noticed, that pump was less than a week. Now, if you look at the second time it also pumped, that was February 23rd, right? And then for the next 2 weeks up to the peak of Wednesday, March 10th, it skyrocketed. So it went from $45 all the way to $265. So this is how profitable swing trading can be. Right, by understanding how long a hype for a certain stock lasts, you would be able to maximize profits while realizing how much time you have left before the price of a stock completely drops. By swing trading and having in mind a plan and a time frame of how long and how high a stock or crypto can go, can maximize profits and cut losses. One thing to keep in mind is that it doesn't work for every stock. You have to understand that the market we're in is actually kind of ridiculous right now. From Tesla to GameStop to Dogecoin and Shiba token, people are basically pumping and hyping certain coins for 1 or 2 weeks. This isn't something you can apply to another stock like Bank of America or Coca-Cola or another stable coin that hasn't risen for, weeks. So as a swing trader, it's so important to identify which coins you can apply your strategy on. So the third type of trader is a long-term investor. It's exactly what it sounds like, a long-term play. You're going to be buying and holding coins for years to come. Using this strategy minimizes risk a lot, but it also reduces potential profits. But I mean, clearly this strategy works. If you take a look at the price of Bitcoin since 2013, if you were a long-term trader and you said, okay, I'm going to buy Bitcoin and hold it for 5 or 10 years to come, you're definitely going to profit, but it's just a matter of when. If you take a look at SPY too, in the last 10 years, right? In 2011, SPY was $133, and now it's $410. So clearly there are some instances where long-term trading definitely works. So now we move on to ways to play it safe while you're trading. So there are a lot of ways to minimize risk when you're trading cryptocurrency. One method that I love to use is to utilize USDT. So if you haven't figured out yet, USDT is basically USD, right? Every one USD token is backed by one USD. So basically, in the event of a bear market, right? In the event a crypto goes down, or you think it might go down, you can convert that crypto into USDT, right? So basically, USDT is a safe place for you to hold your money on an exchange in the event that all the cryptos just start bleeding, right? Because, you know, if Bitcoin goes down by like 5 or 10%, the entire cryptocurrency market, for the most part, is going to be all red. So you might be asking, how do I convert my crypto to USDT, right? Now there are many ways, and on Binance and Kucoin it's similar. So the first method is you just go to spot trading, right? You just go to the trading exchange. So the first thing you have to do is to find the BTC/USDT pairing, right? So after you found that pairing, all you have to do is, if you have Bitcoin, you just create a sell order and then just sell it off. And then that Bitcoin then turns into USDT. Alright, so in order to trade your Bitcoin or Ethereum into USDT quickly on Binance Exchange, all you have to do is go to trade and then scroll down to where you can see convert. Then, assuming you have Bitcoin or any other coin, right, you can put that as the first type of token you have. And then you're going to, in the to form, you're going to select USDT over here. So then you can input the amount of your Bitcoin that you want to convert to USDT. Now this works for all sorts of tokens. And actually, a lot of different types of cryptocurrencies are actually supported on Binance Exchange for this fast convert method. Something to keep in mind is that the fast convert method is not available on Binance US. You would have to go into the trading dashboard and actually trade your Bitcoin or Ethereum into USDT by finding the correct pairing, which is BTC to USDT or Ethereum to USDT. Basically, in order to find all the cryptocurrency pairings on your Binance trading dashboard, all you have to do is go to the right hand side and then go to fiat, and then all you have to do is change to USDT. And now you can see all the different types of cryptocurrency coins that have a pairing with USDT, which should be hundreds, right? So all you have to do is click on the cryptocurrency coin you have. Let's say I have ICX or Icon, right? And then you can trade your Icon or ICX into USDT from here, just by selecting a price and then submitting the order, the sell order. So the last point in this lesson is to make sure you remember how important it is to diversify your portfolio. Especially in the cryptocurrency market that we're in, there are now thousands of different cryptocurrency coins, right? Now it's getting harder and harder to find a potential winning coin as more and more cryptocurrency coins are coming into the market, right? So sometimes putting like $100 into 10 or 100 different tokens is a better strategy than putting $10,000 or $5,000 into 1 or 2 different types of tokens, right? One instance of a recent crypto coin that was a huge winner was Shiba Inu token. So after the hype of Dogecoin, there eventually was another hype coin, which was Shiba token. So apparently someone who bought Shiba token years ago turned $17 into $5.9 million. So it says this person actually purchased the tokens last October in 2020, and it was just $17, but he was able to get 200 billion tokens for that. Just 1 or 2 days ago, those $17 worth of tokens today is actually worth $5.9 million. Now, not everyone is going to have the foresight to do this, but who knows, in the future there might be a new hype, right? Maybe cat tokens are going to be a new hype. Maybe a token that not many people talk about, but has a lot of potential, eventually gets a partnership with like a big and renowned firm, right? It happened in the past with Chainlink. You never know. So in order to be successful when trading cryptocurrency, you have to combine all these strategies together, right? The first thing to do is you have to keep your portfolio diverse, right? You should have maybe 10 or 20% of your portfolio into coins for the long term, right? Cryptocurrency is not going away, and eventually the price of crypto is going to go even higher. Then you're going to have another slice of your portfolio, maybe 20 to 30% into different tokens, right? Maybe 10 to 30 tokens that you've researched and that people have touched upon that you personally think would have potential to grow in the future, right? So you buy and then you hold those. And then depending on how much risk you want to take, you can start day trading maybe 10 to 20, 30% of your portfolio into the coins that are going up maybe 20, 40% today, right? 2 weeks ago it was Doge, a few days ago it was Shiba token, and today it's Kishu token, right? So there's always going to be a new hype. There's always going to be something people want to throw money at. So if you feel like you can take on that risk and constantly monitor and trade a certain amount of your portfolio, then go ahead and do that. So now that we have a good understanding of the winning trading strategies every successful crypto trader should have, let's go into the next important lesson on the fundamentals of technical analysis. Welcome to the fundamentals of technical analysis. So in this very important lesson, I'll be going over something called technical analysis. Technical analysis is the basis of trading. This is how traders use patterns and historical data in order to figure out entry and exit positions for every trade they make. I'm going to be going over the trading platform that I use. I'm also going to be talking about what candlesticks are and how to trade them. And I'm going to go over time frames, the 1 minute, 5 minute, 30 minute, 4 hour, and 1 day time frames, and how that's important when it comes to trading. Also, I'll be going over those lines that you see on every graph on a major trading platform, the moving averages and the VWAP. So let's just jump right in. If you remember me talking about TradingView is one of the best ways to find trading ideas and use technical analysis on every stock, crypto, or commodity available. So in order to get onto TradingView, all you have to do is go to www.tradingview.com, right? And then the first thing you see is this. You're going to see top traders and their trading technical analysis for all different types of stocks, commodities, gold, forex. So this is where some of the best traders are sharing some of their insights. So this is why I love TradingView. Not only do they have charting data on every single tradable security, you can also search up a coin, for instance Doge, right? And then you can see the price pairing on all different types of platforms, right? You can see Doge USD on Binance. You can see Doge USD on Bing Bong. You can see Doge USD on Gemini, Bitfinex, all different types of exchanges. Also, you can see what a general consensus of what everyone's talking about. So those people who posted trading technical ideas, the technical section of this chart basically takes all the opinions of all those trading ideas and it tells you whether or not the general consensus is bullish or bearish. Then if you go to the idea section, you can see all those different people talking about their own opinion of where Dogecoin will go. Finally, if you go to the full feature chart, you can access all the different types of indicators and tools that I use for trading. Now I'm going to be going more in depth into this in the later lesson in this course. Now as for these technical indicators, I'll be going more in depth into them later on in this module. Let's just go back and talk about the basics of what you see on a trading chart on a major exchange like Binance or Kucoin, right? So if you remember in the previous lessons, I did do an overview of the trading dashboard. but I didn't go into depth about what these candlesticks and lines mean on the chart. So basically, technical analysis is trading on historical data, basically, right? It's trading on patterns that people have seen time and time again, and using those certain patterns to indicate and forecast where this crypto or stock will go in the future. So like any pattern, there are certain different types of candlestick patterns that you have to remember. So before that, let's talk about the anatomy of a candlestick. So before, I mentioned that every candlestick was indicated a certain time frame, right? Depending on what time frame you selected. So if you were on the 1 day, every candlestick you see on this chart shows you the movement of Bitcoin in 1 day. So today, looking at the previous candlesticks, I can forecast that Bitcoin will probably move up a little more from this position, right? So if we were to do technical analysis, I would just put a little arrow here indicating that I think Bitcoin will move up from this position it is at today. Now, here are the reasons why I think this, just based on candlesticks, right? So in order to understand the anatomy of a candlestick, I'm going to pull up my very own candlestick cheat sheet. So basically, the green or red rectangles you see on every candlestick is what you call the body. Now the lines sticking out of the body of a candle is what people usually call the wick. And that kind of all makes sense when you look at a candle, right? You have the body of the candle and the wick of a physical real candle. So like this infographic shows, the bottom part of the body of the candle is the open. It's basically the price the candle opened at for that time frame, right? So if it's every day, this is the price of Bitcoin of when it opened during the day, right? And then at the top of the body of the candle is the close price. It's basically where the price closed at for the day, right? If you're on the 1 day time frame. Now, just having that information isn't enough, right? You have to look at the wicks of the candle. So the top of the wick is the highest price in that daytime that the price of, let's say, Bitcoin reached, right? And then if you look in the bottom wick, it is the lowest point or the lowest price in that day time frame of the candle. So it's kind of overwhelming at first, but the more you look at these patterns, the more you get a hang of it, right? Like I went over before, if the candlestick is green, it means the price moved up from the previous candlestick. If it's red, the price went down from the body of the previous candlestick. So you don't have to remember all of this at once, but it's good to keep looking at the charts and then keep remembering all these different types of patterns. So essentially, if you look over here, a doji is basically like a cross, right? So the open and closing price of the candle was very close together. So what this essentially means is that traders are indecisive about where the price is going to go, right? That's why the price hasn't moved higher or lower drastically. So similarly, spinning tops are similar to dojis, right? The price hasn't moved up or down drastically. People don't know where it should go. So this is why these are called neutral candlestick patterns. So now let's look at the bullish candlestick patterns. So the first pattern is what you call a hammer. And you guessed it, it's because it looks exactly like a hammer. So you have a very tiny body but a long wick. What it basically means is that the price tried to move down, right? There was a point where the price was very low for the day, but buyers did not allow that. That's why the price of the coin or the stock closed like that, like a hammer. So it's a bullish indicator, and it doesn't work every time, but generally time and time again, historically, these patterns showed, and this is what happened. So next one is an inverted hammer. Same thing. The price tried to go up, but it was rejected. But luckily, instead of going into the downside and closing below the candle before it, it closed positive. So that is still a bullish indicator. So the next one is the dragonfly doji. It's kind of the same thing as a hammer. The price tried to move down, but it failed. And instead, the price closed up higher than the previous candle. Now the next pattern is the bullish engulfing candlestick. In this candlestick pattern, in the previous candle there was a red candle, but it was smaller, right, than the next candle, which is a huge green bodied candle, which is very bullish, right? If the previous candle was very small and bearish, but the next candle was very big and bullish, that indicates that the trend might continue for a bullish rise in the price. So the piercing line, same thing. The wicks, there's a bearish red candle before this candlestick, but there's also a huge green body candle. But most importantly, the wicks go higher than the previous red body candle's price. And then we have the next bullish pattern, which is the morning star pattern. So basically, as you remember, back over here, there is a doji or a spinning top, followed by a huge green body candle. So at first, traders were undecided on where the price was going to go, but then followed up by a great big green body candle. Traders have decided and they know where this trade will go, which is to the upside. So the next pattern is very similar to the Morningstar pattern. It's just a doji instead of the spinning top. And then the final bullish pattern that we're going to be talking about are the 3 white soldiers. So basically 3 green candles. This indicates the beginning of a bullish trend that is strong, right? If you have 3 consecutive candles, that means that's basically a very good thing. Now that we covered the bullish candles, let's now look at the bearish candle patterns. So the first bearish candle pattern is the shooting star. So basically this is a inverted hammer, right? It looks like if you looked at this candlestick pattern and you flipped it upside down. So if you're starting to get a hang of it now, you can probably figure out why, right? The price tried to move to the upside, right? But it was rejected and traders decided to close red for the day. So the next pattern is the hanging man. So basically traders tried to sell off the stock, but it was rejected. But for the close of the candle, it's still red, indicating that it's bearish. It basically indicates that the sell-off will continue. So the next candlestick pattern is the gravestone doji, which is basically the dragonfly doji flipped, right? And the same intuition that goes for the shooting star applies to the gravestone doji. The price moved up, but it was rejected, but it closed indecisively. So that is actually a bearish indicator, right? Even though at the end of the day, traders were undecided, the price was rejected from the top. So chances are it's unlikely that the price will climb again. So now we move on to the bearish engulfing candlestick pattern, which is basically a small green body candle right before a long bodied red candlestick. Seeing this huge change in candlestick bodies is just bad news, right? And an indication of a bearish trend. So the next one is the dark cloud cover, which is similar to the piercing line. And then we have the evening star candlestick pattern, which is a green candlestick body followed by a spinning top and then a red candlestick body. So the evening star is a long green candlestick body followed by a spinning top and then a long red candlestick body. So this is important to note because it indicates that the trend saw a huge change to the bearish side because it ended with a long red candlestick body. So similarly, the evening doji star, the doji replaces the evening star. And then finally, we have the 3 black crows, which is similar to the 3 white soldiers, right? It's the consecutive reconfirmation of a bearish trend by having these red long body stick candles. It's the continuation of the bearish trend by having all these red long-bodied candlesticks. Alright, so now that we have learned the candlestick patterns, let's try to apply that in trading right now, right? So already off the bat, looking at the day chart of Bitcoin here, I already found one of those candlestick patterns, right? If you look at this part of the chart, you can see that there is a red smaller candle here, right? And then a long engulfing green candle. So basically this price point here indicated that the price of Bitcoin was going to go up, right? If you look at this is clearly a bullish engulfing candle looking back over here on this chart. Alright, and now let's see if we can find another candlestick pattern, right? Oh, there it is. We just found the morning doji star candlestick pattern, right? So basically you have a huge long-bodied red candlestick here, right? And then it's followed by a doji. And then it's followed by another green candlestick. So this basically indicates a huge trend change, right? And then as you can see, the prices actually moved to the upside from this candlestick pattern. Just so you guys can see the pattern over here, it's clearly the morning doji star right over here. So if we look at the price of Bitcoin today, if this candle for today closes on the upside, this could be the setup for another morning star doji pattern. So if this price stays above 50,500 per Bitcoin and it closes for the day above that price, then it's going to be bullish from here. So this is why candlesticks are so important. It basically tells you so much information, and when used in conjunction with other technical indicators, you can definitely get a sense of where your trade is going to go. So now that we have covered candlestick patterns, let's get into moving averages. So what are moving averages, right? So moving averages are among the most important technical indicators, along with support and resistance levels. They are calculated to identify the general trend of a stock, right? And to provide levels of support and resistance. It is generally a lagging indicator, but when used in conjunction with MACD moving average crossovers, you would be able to use it as a leading indicator. So as the name moving average implies, it is the average taken over a specific period of time. So the lines you see on your graph over here are basically moving averages taken from different time frames. As the first part of this graph says, the pink line is the 7-day MA or moving average. In order to arrive at that value and create that line, you have to take the moving averages of the last 7 days. And then if you look at the yellow line, it is the last 25 days. If you look at the dark red line over here, it's the average of the 99 last days. So you can set whatever number of days you want your moving average to be, but generally and most popularly, people use the 50, 100, and the 200 moving averages. Now, the higher your moving averages, or the more days you take in consideration for the moving average, the more of a lagging indicator it is. So intuitively, it makes sense, right? If you're using the 7-day moving average, the price is more fluid and reflects deeper on the last 7 days or the more recent candlestick patterns, right? If you take the 200-day moving average, however, you're going to get an average based on the value of all 200 days, right? So the price isn't as reactive. But what I noticed is that the 200-day moving average is generally a very strong level of support or resistance. So I mean, looking at this chart here, you can already see the moving averages in action here, right? So according to this 99-day moving average, if you look over here, the price actually bounced off of it. That's kind of incredible, right? So it went a little under, but if you look over here, using the moving average as one of your indicators, you could have actually entered the position over here. Using what you know about candlesticks and the moving average as a support, if you knew that the 99-day moving average was going to be a huge level of support, which it usually is, you can see and buy in over here, right? If the price moves higher than the previous day candle's closing price, combined with the fact that the price jumped off of the 99-day moving average, that was going to be a very good indicator and entry point for your trade. So if you look back over here, historically, it also jumped off the 25 moving average over here. Now looking at where we are today, it looks like Bitcoin actually broke the 99-day moving average, which is obviously a very bearish sign, right? The candle definitively closed underneath the moving average here. It's a good distance from the moving average. So right now it's kind of telling you that the Bitcoin market might go bearish from here. So the last thing to know about moving averages is that there are two different moving averages: the simple moving average and the exponential moving average. So basically this is just two different ways of calculating your moving averages, right? So basically what the difference is that simple moving average is just the average, right? While the exponential moving averages, it's more weighted in your recent candlestick or price points. So generally the EMA is a better indicator in my opinion because it shows a faster reaction to the price. By weighing your recent data points more than all your older data points, right, you have a better idea of the trend now or more recently. So in a way, it's more accurate. So that pretty much wraps it up for candlesticks and moving averages and the fundamentals of technical analysis. In the next video lesson, I'll be going over my personal secret profitable indicators that I use for trading. See you guys in the next lesson. Hello and welcome to Profitable Secret Indicators. In this lesson, I'll be talking about the very important strategies and indicators that I personally use that allows me to find coins that move up 10, 20, even 40% in the short term. When used correctly in the long term, you can also swing trade with these strategies and make 40, 80, or even 400% returns over 1 or 2 weeks. So the first thing we have to go over is the difference between lagging and leading indicators, right? So some of these indicators are going to be lagging and others will be leading. What that means is that it's exactly what it sounds like, right? Lagging indicators are too slow and not reliable tools to forecast the growth of a coin. But how lagging indicators are used is that they're used as support or resistance levels, or they're used in conjunction with other indicators like the MACD crossover to forecast the future price of a coin. On the other hand, you have leading indicators, right? So basically these tools are going to be able to tell you if the price of the coin will move higher or lower in the near future. So probably and arguably the most important tool are the support and resistance levels, right? So there are certain levels of support and resistance for everything you trade. Most times the reason for the support or resistance level is psychological, right? It's just like when Bitcoin was $50,000 or $10,000, right? That was big news. The price would either be rejected at the 10,000 or 50,000 mark, or it would act as a really powerful support or resistance level. So something worth noting about support and resistance levels is that the more the price of the commodity bounces from this support or resistance level, the stronger that support or resistance level becomes, right? And the reason why support and resistance levels are so important is because it's the most obvious indicator, right? All the traders are looking at it. So the more and more people are looking at the same indicators, the more likely they'll act on that indicator, right? And they'll take the trade accordingly, according to that technical indicator. So because more and more people act on that trade, the more true that technical indicator will be. So over here we have a graph that clearly shows you the support and resistance levels and how they react to price changes, right? So if we look at this graph over here, the price goes up and then it was rejected from this point over here, right? So the price goes down and then it was rejected from this level over here and goes up. And then it goes down again and it was rejected a second time. So because you see it was rejected from the same price point twice, you can already tell that that is a support level. So when it comes to trading and it goes down the third time, right, you can probably take a position over here and you can probably buy at this support level since you know it was already rejected twice, right? It's a pretty powerful support level. In case your trade goes wrong, you can always set a stop loss over here, right, to sell off your position. So the second time it goes up and was rejected from this level of here, you can already tell and make this a resistance level, right? You could probably already tell since it was rejected from this point over here that there was going to be a sell-off over here at this level. So now you have identified the resistance and the support levels, right? Over here, over here, over here, over here. But what happens when the support is broken, right? When the support level is broken, it becomes the new resistance level, right? So now that the price went to the downside over here, and when it went back up, you knew it was going to approach the new resistance level over here, right? So you could have taken a short position over here. Because as you can tell already, 1, 2, 3, 4 times the price is hitting this level. I mean, well, 3 times in the past the price has hit this level and reacted to this level, right? So it's a pretty strong support slash resistance level. So now that we have talked about support and resistance levels and how important they are, let's go over another very important indicator, which is the RSI. So basically what the RSI it stands for is it stands for the relative strength index. So I already had it on my trading view, but if you wanted the indicator on your trading view chart, right, you just click on indicators here and then you search RSI. And then the RSI I use is the stochastic RSI. So just click that and then boom, it appears on your chart right away. So what the RSI is it's a momentum oscillator or indicator. It measures the speed and the changes of the price movements. So it's a very good indicator of whether or not the stock or crypto you're trading is overbought or oversold. So it's a great and excellent indicator for swing trading. So the way I use the RSI indicator is that use it in conjunction with the price, right? So for example, usually I look at the RSI and if it's below the level 20, right, then I can tell the commodity is already oversold. So it's the oversold levels. When it's above 80 though, that tells me the price of the commodity is overbought. So for example, let's look at the price of Bitcoin over here, right? It's dipping all the way down over here. And then as we can see on the RSI, it's dipping all the way down over here, right? So remember what we said? Now it's getting into the oversold levels, right? It's below 20 over here. And as you can tell over here, it's also showing that, right? So this was actually a good indicator of, hey, maybe I should buy Bitcoin in the short term here, right? My RSI indicator is indicating that it's already deep into the oversold levels and it might rise back up. And as you can see, eventually it did, right? The price of Bitcoin just shot up from this position. Right before this, a few candles down. There's also another great example of how the RSI indicator would have told you a great entry point for Bitcoin, right? So over here, as you can see on the RSI indicator, it was reaching the overbought levels, right? And same in conjunction, the price of Bitcoin over here seemed to be going really high. And then shortly, you could have taken a position here, right? The indicator correctly indicated that Bitcoin's price was too high and that eventually it would need to sell off, right? And as the RSI indicator correctly indicated, the price of Bitcoin shortly sold off from that position there. So the next great indicator on my list are the Bollinger Bands. So let's see, what are the Bollinger Bands? Let's go back to our trading view and then let's go to indicators and then let's just type in Bollinger Bands. I have it highlighted. And then once you click on that, as you can see, there are two different lines, right? And then it's kind of forming two different bands around the price of Bitcoin right now. What the Bollinger Bands are basically they are momentum indicators. And calculating the Bollinger Bands is pretty simple. It's basically two standard deviations above and below the simple moving averages. So this indicator is pretty intuitive and simple to use. Basically, when you're hitting the upper bands, it indicates that the price may fall, right? And if you're hitting the lower bands, it indicates that the price might rise. So the indicator doesn't work 100%, but used in conjunction with other indicators, you can have cohesion and you have formulate a profitable trading strategy, right? So for instance, back where we used the RSI, right? So we looked at the RSI and we noticed it was in the oversold zone. If we were unsure about using this one indicator, we could have also used the Bollinger Bands, right? So at the same time at the Bollinger Bands, over here, it was hitting the lower bottom bands. So this is already two indicators used in conjunction that tells me that maybe the price of Bitcoin will go up from here. It gives me more confidence that the price of Bitcoin will rise from this position, and it did. So now that we have covered support resistance levels, RSI, Bollinger Bands, let's move to MACD crossover, which is arguably also one of the most popular technical indicators. So what MACD stands for is Moving Average Convergence Divergence. It's a trend following momentum indicator, and it shows you the relationship between two moving averages. So if you look at the settings over here of the MACD, it clearly shows you that it is the input of the 12-day simple moving average and the 26-day simple moving average. So it's pretty simple on how to use this indicator. The blue line is the MACD line, and the orange line over here is the signal line. When the MACD line crosses the signal line, it indicates a big change in the trend of the trade, right? Like over here, we see the lines cross. The blue line, which is the bullish line, crosses the signal line. And as we can see, shortly after, the price of Bitcoin went up from that position. Also, one thing to know was that it also touched the Bollinger Band as we graphed out over here. So looking at another clear example over here, you can see the crossovers in action, right? The blue crosses the orange over here, and then the price goes up. And then over here, it crosses again. The orange crosses the blue, and again over here the orange crosses the blue, which is a sell signal, right? So there's also another way you can use the MACD indicator. When you look at a chart and the MACD histogram, right, if you see the MACD histograms making a lower highs, but the price of your stock or commodity is going higher, right, there is something you call a divergence. So when your indicator is moving lower but the price goes higher, that tells you it's a bearish divergence, right? So that means there's going to be a clear indication of a trend reversal. The price is going to sell off. And then as we soon foretold, there was a MACD crossover here, which was the sell signal. So the opposite of a bearish divergence is, of course, a bullish divergence, right? So as it indicates over here, looking at the MACD lines, it's forming higher highs, right? But on your stock price, it's forming lower highs, right? So there's clearly a divergence there. But, you know, it's on the upside because the price was selling off, right? There's going to be a trend change at the crossover. So looking at the MACD line over here, you can tell that because of divergence, there was a crossover over here. So this would have been a good range for you to buy at. So one little bonus secret indicator I want to do for you guys is talk about Fibonacci levels, right? So what Fibonacci retracement levels are support and resistance levels from where the price may most likely bounce off of. So I don't want to go too deep into it, but it is based on the Fibonacci number series. So the popular Fibonacci levels are the 23.6 level over here, also the 38.2% level over here, then the 61.8% level over here, and finally the 78.6% level, which is this yellow support line you see over here. So these are the 4 important levels you need to know. So if I didn't have this indicator on, you would be able to draw a Fibonacci replacement level in your trading view as well. So the first thing you would do is go to the left hand corner, and then you go to Gann and Fibonacci tools, which is the 3rd tool on this list. So then you click on this little arrow thing, and then you go all the way down to Fib retracement. So now that we have this tool, in order to draw the Fibonacci retracement level, you just drag it from the highest point to the lowest point on this little trend here, right? So over here on this graph, I see that there's the highest point in this trend, so I'm just going to drag it all the way down so that over here at the 0% level, you see the lowest point on this graph that it touched, right, so far. And then you just click again, and then you have it. You drew your first Fibonacci retracement level. So you can kind of see how well it works already, right? If you look at the 50% level over here, you see it bounce off here 1 time, and then 2 times, and actually another time in the next candle. And then when it breaks this 50% level, it goes down drastically, right? So you could actually have a short position over there. So the way to use this tool is you now know the trend in this short time frame, right? So if it ever shoots back up, right, you know you can sell at the 50% level over here, right? So it gives you a good level of support and resistance. So how and when do you use technical indicators, right? Essentially, technical indicators are a good entry and exit indicator, right? Especially if you're a swing trader, it gives you a good idea of when to enter the trade and when to exit the trade. Overall, I just use it every time I trade because it gives me confidence in my position. Now that we have covered the fundamental technical analysis as well as the profitable secret indicators, let's go over the successful trader's workflow. How do we take in everything we have learned in the past modules in order to create a winning strategy that traders use every time consistently? Hello and welcome guys to the Successful Traders Workflow. So all these things we already covered in previous lessons. I'm just going to go over them again so you get a good idea of how you can go from the beginning to the end of finding 10x crypto coin winners. No matter what your trading strategy is, if you're a day trader, a swing trader, or a long-term trader, every successful trader has to go through this really important workflow. So the first thing you have to keep in mind is where to find potential winning coins, right? So there are two methods to do so. So the first method is online communities, right? You have to figure out what people are talking about so you can figure out if there's hype behind this coin. Like I said before, generally you can find good online crypto communities within each major social media platform. For example, on Twitter, you can search up hashtags of any coins that you suspect will be hyped. Just to go a little more into Twitter, there is an online website called StockTwits. Basically, on this website, you can see what stocks or cryptos that most people are talking about. That way you can do your own due diligence after you see the coins mentioned. For example, right off the bat in the trending section, there was a coin called Matic, which is actually one of my favorites to trade for day trading in the past. And I am glad it actually shot up in the recent few days. Knowing the price history of this stock in the past, having traded it many times, I understand that this is just a hype coin. But to double check, I would probably go and check the subreddit for Matic to see if there's any big news. So going on the subreddit for Matic and then filtering by the top most upvoted threads, I can see that there is no notable catalyst news event that triggered this pump. So seeing that there's no major news, that tells me there is no long-term organic growth for this coin. It's just a good day trading or swing trading coin. So as I was talking about, other good online community platforms can be found on Facebook, even though I don't really recommend it. It's more for the beginner traders. The only reason I would use Facebook is if I wanted to see what people were constantly talking about, like what the mainstream traders are talking about. One of the best online communities is Reddit, right? And every single crypto coin has a subreddit. So if you go on those subreddits like I did with Matic coin, you would be able to find news catalysts, you would be able to find news that other people haven't learned about yet. So if you noticed a coin was pumping a little bit and you get in on big news before the mainstream traders know about this news, then you can make big money. Other communities that have up-to-date alerts is Discord and Telegram. But it's important to note there are a lot of pump and dump groups on Discord and Telegram. So what these groups do is that they call out a specific coin throughout the day and then they try to get people to buy that coin just to pump it. Now usually this doesn't work because the announcer of the pump probably has an inner group. This inner group gets the alerts first and then they buy in and then they sell when the coin pumps. So it's important if you're going for Discord and Telegram groups to figure out which groups are for the beginners and the intermediate traders as well as the pump and dump groups. Now another really good resource is YouTube. Every day there are more and more crypto YouTubers. Generally, I appreciate their hard efforts and they put a lot of work into their due diligence. And if you research properly, you can find YouTubers who call out the right coins for the right reasons. This is a little method that anyone can do to find promising crypto YouTubers, right? So let's say you wanted to figure out who is a good YouTuber who called out coins before they even pumped, right? So you noticed maybe SafeMoon, right? April 18th was right before this huge pump of SafeMoon. If you can backtrack on YouTube and figure out which YouTubers were talking about SafeMoon before it pumped, you can go ahead and search SafeMoon on the YouTube search bar and then filter by this year, right? And then you are going to be looking for people who talked about SafeMoon, let's say 1 month ago or at least 4 weeks ago, right? So after a lot of scrolling, because there seems to be over 100 videos on SafeMoon, I found someone talking about SafeMoon before the price pump. So this guy was talking about SafeMoon 1 month ago.
Okay.
This was April 14th, 2021, right? So he was talking about SafeMoon right before the huge pump of over 10x. If you do this for a lot of coins and then you would be able to find the right YouTubers, you could make a lot of money. Remember, I did talk about one more online community platform called 4chan Biz. This is where I honestly think you can get the fastest news on crypto coins before the mainstream media gets into it. But there are a lot of coins being talked about. You have to figure out which posts are people obviously trying to pump the coin and which aren't. So now that gets to my second part of the workflow, right? You have to use volume pingers. The two reasons why you would want to use a volume pinger is one, if you're a day trader, and two, if you want to get a good entry point or exit point on a coin. You can just Google search Binance volume pinger and then you get this volume pinger created by CryptoZiz. Here you would be able to get the latest coins with any significant change in volume or Bitcoin transactions. So for example, we see PSG, right? It just pinged us. The first thing I noticed about PSG is that the 24-hour Bitcoin volume is still pretty low. 100 something is considered low, so that means there is room for that volume to grow and more buyers to come in. What I noticed from the chart though is that it has already pumped a little bit, but this is normal. If you were here when the volume pinger pinged it over here and then it dropped, you could have entered at this point over here. Additionally, remember time frames and candlesticks, right? Right now, I'm on the 30-minute time frame, and each candlestick is 30 minutes. But I want to see a broader picture of this graph, right? So I look at the 4-hour, and I notice, wow, it's actually down a lot from its peak. And then if I look at the 1 day, I'm starting to think, hey, this might be actually a good buy. This might be the comeback pump. But in order to figure out a better entry price, I would of course look at my other technical indicators that I talked about. So the third thing you must do in your trading workflow, right, is you have to look up the market cap of these coins. You have to go to coinmarketcap.com and search these coins up and figure everything about them. So the first thing you have to look at when you look at a coin is its market cap, right? So let's just say we're interested in buying PSG, right? So we'll just search that token up in CoinMarketCap, and we notice that it's actually ranked 618, which is not bad. So that means there is room to grow. Its market cap is only 44 million. Additionally, what I notice is that the volume is significant and it is not a pump or dump coin, right? There's a good amount of volume. There's a lot of traders trying to buy this coin. So right off the bat, looking at PSG token, I see that it's listed on Binance, which is very good news for me. And I also see it's listed on other exchanges like Upbit and PancakeSwap, and this exchange called Paribu. For those of you who don't know, Upbit is the Korean cryptocurrency exchange. So the reason I want to look for more exchanges and more well-known cryptocurrency exchanges for this token to be listed on is because more exchanges means more volume, right? It means more access for buyers to buy this token. So that means it has more potential for growth overall. As long as it's listed on Binance though, that is a really good indicator for me. So the second thing we're going to do is go to coinmarketcap.com and search PSG coin if there's any news upcoming that people are excited about relating to this coin. So I searched it up and unfortunately there is no upcoming news, so that makes it less enticing for me to buy this coin. So another thing we have to do is of course search PSG tokens subreddit, right? We have to figure out what exactly this coin is. So after some digging on PSG subreddit, I figured out, so this is a fan share token integrated with this app involving this soccer team. So apparently looking at this, it was an incentive for people to sign up on their app. So again, this doesn't make me as enticed to buy the coin now because it doesn't seem like there is a huge market for this use case of the coin. So if you decide you want to buy PSG token or the token you're researching, right, it is important to determine a good entry and exit price, right? So that is exactly what we'll be covering in the next video lesson. How do we find the best entry and exit positions for our trades? See you guys in the next one. So welcome to entry and exit strategies. In this video lesson, I'll be going over into different types of strategies you can take to get the best possible entry and exit position. The first thing I want to cover is the mindset of trading, right? Remember when I talked about dollar cost averaging in module 3? It's important to remember that there are ways to use technical indicators to try and get the best possible entry. Keeping this in mind is important because you do not want to be entering a trade and then exiting the trade after it goes 1 or 2% from where you wanted it to go, right? This will cause you to panic sell, and then when you panic sell, what if it goes up, right? This will cause you to FOMO, and then you start emotionally trading. So you want to enter with a plan, you want to understand and keep in your mindset that there is no best entry position level. And by applying dollar cost averaging, you can split up your buying positions, right? You can buy some of it when it goes down, and then you can buy some of it as it goes up. The last thing you want to do is to put your 100% position into this token and then sell it and then buy it and then sell it and enter that cycle of emotional trading. So let's talk about the next bullet point on this slide, using technical indicators to determine entry points. So as I talked about before, you're going to be using trading views so you can have access to a bright-minded community of trading ideas for a certain coin, as well as many different indicators that you can use to determine your entry positions. So I already have a saved template of all my indicators that I use. You do not have to use so many indicators yourself, but for me personally, that's just what I'm comfortable with. As a beginner trader, you would have to try to test certain indicators, right? You would want to go into TradingView and then click on indicators and then look through the best indicators and then look through every price point in different time frames to see, can this indicator predict accurately entry and exit positions, right? It's all about A/B testing. So after a lot of A/B testing, I did concoct a series of different indicators which I use to get into my entry positions. Different types of people use different indicators, whatever suits their trading style, right? So I mean, this is just a reminder, but you can use a confluence or many different indicators at once to confirm whether or not you want to enter the trade. So for instance, right, if we look at this point over here, this would have been a great entry point, right? Because it breaks the Fibonacci support level right over here. And according to my other indicators, right, just as it breaks the Fibonacci support level, it also has a MACD crossover. Additionally, if we look at the on-balance volume indicator, it looks like there's a surge in volume and it's significant enough to confirm that this is an important trend, right? I mean, also looking at the RSI, it seems that it's in a level where it's reasonable to buy. It's not overbought or oversold. So in the more advanced courses, I would go over different types of technical indicators that require more practice to use. For now, you don't have to worry about that too much. On your own time, you can test different indicators and see what best suits you. Thanks to technical indicators, we're going to enter with a plan and exit with a plan. So let's say, for instance, you were trading Matic again, right? So you're telling yourself, all right, I'm going to enter here, right, with 50% of my position. Alright, so now, and then in your mind you have to understand, okay, so after it rises, let's say 10%, I'm going to sell 50% of my position, right? So it actually did rise a little more than 10% over here. And this is where you sell half your position, right? And then this is where you ride the other half. And then this is also where you set a stop loss of, let's say, 5% from the peak, right? So luckily your stop loss didn't trigger and then it goes up even more, and then this is where you're telling yourself, all right, it went up another 10%, let's sell and allocate another 25 or 50% to exit. So I cannot emphasize how important it is to have a trading plan when it comes to trading crypto. The easiest way to lose money is not to have a plan to begin with, right? Trading with emotion is probably the #1 reason why traders lose money. So now that we talked about technical indicators and entry and exit strategies, let's talk about the macro environment of crypto. Let's talk about how you can use cryptocurrency news with technical indicators to trade crypto. So how does news affect crypto, right? Well, that depends on the news, right? When a coin that hasn't been listed on a major exchange gets listed on a big exchange, that is definitely a reason why the price would hike. If there's a partnership with a major company, that is another catalyst for a big pump, right? One notable example in recent news was Dogecoin, right? And the fact that Elon Musk was going to go on SNL or Saturday Night Live and talk about Dogecoin. Let us explore how that news affected the coin. So pay very close attention to this graph of Dogecoin, right? So there are 2 important dates to note. So the first very important point to note was that Elon Musk tweeted about SNL and Dogecoin on April 28th, 2021, right? So the next important date was the actual airing of the date of SNL, right? Which was actually May 8th. So now that you have these 2 dates in mind, let's see how the price of Dogecoin was affected, right? So right when Elon Musk tweeted about Dogecoin, it slowly creeped up all the way to a high of 71 cents, right? And this is from a price of 27 cents. And then right after the show debuted, it fell all the way down from 71 cents to 46 cents. So just so you can see it, this was when Elon Musk tweeted, and then this was when the show was aired. So this is a typical scenario of buy the news, sell the hype, right? So many people were holding the Doge token during the SNL show, right? Hoping that it would shoot somehow higher than it was on the day of the airing. But that is not true at all, because without the news, people realize there's no big exciting event coming up after that, right? So you would just buy the hype and sell the news. So most retail traders would intuitively and emotionally wish that the price of Dogecoin would rocket after the airing, but that is definitely not the case. And this happens time and time again, right? With quarterly earnings reports on stocks and crypto news, right? Even though a stock posts good quarterly earnings, the price drops. Why? Because there is no good guidance or future forecasts for growth later on, or that people were expecting good news and it was just above average, right? So it's really interesting, based on historical past news catalyst events, to try to figure out a trading method around trading on news. Most times a crypto or stock doesn't go the way you want it to go, or the way that you think intuitively it would go based on news. So that's important to remember. So let's talk about how we can use technical indicators with news, right? So back with Dogecoin, right? Now this was April 28th, right? When the tweet was announced. And then right off the bat, you see that there was a little spike following the tweet, right? We have to trust our support levels, right? So over here, there was a previous high all the way back here in April of 16th, right? We're going to connect a support line over here, right? So I'm telling myself, if the price of Dogecoin goes above this support level, I am going to go and buy this coin. And remember, we have to keep in mind our positioning and dollar cost averaging, right? We'll only buy 50% of the position when there is a clear candle on the 4-hour that breaks above the support level, right? And then we noticed there was another support level over here. So if it broke this support level, we're going to enter a little higher, right? And of course, there's always going to be a stop loss of like 5% down here. In case the crypto doesn't go our way, we have a stop loss, right? And then of course, we set a profit taking level, right? So it would usually be 10 or 20%, depending on the crypto, right? And historically, we understand that Dogecoin was a particularly volatile crypto, so I will give it a 20% profit-taking level rather than 10%, because we know how the coin operated in the past before. So we would probably sell off 50% all the way up here at 20%. So after talking about how news works with crypto and technical analysis, let's go into looking even broader, right? Of the market cycles and a forecast of the future of crypto. See you guys in the next video. So I think it's so important to talk about market cycles, right? Because trading is all about looking at the different time frames, at the different, perspectives of the picture, right? That's why we have the 30-minute candles, the 4-hour, the 1 day, and then we have the monthly and the market cycles in general. So you have to try to predict and figure out where we are in today's market cycle, right? And that's usually a very difficult task. So as always, we would have to go through historical data to try and figure out and forecast the future. So let's talk about 2017's bull run, right? What sparked 2017's cryptocurrency bull run? That was when all these new coins started with their ICOs and their white papers, and they were talking about a promising future and use case for the coin, right? This was also when new countries were being opened up to cryptocurrency exchanges. For example, the new cryptocurrency exchanges like Bithumb in Korea, right? So this was like the first stage of crypto. So I mean, clearly you can see the impact of market cycles, right? It started when it was in August and then pumped to December. So that was roughly 4 months. And then this market cycle we're in was a more extended and longer pump, right? It lasted from September all the way to April. So intuitively, I'm thinking, all right, it's a little overextended now. Not only did it pump harder, but it was a longer market cycle, right? So I'm thinking maybe the bull run is going to start to drop down a little bit, right? Or relax. And then it's important to figure out why and what caused cryptos pump so much in 2021, right? So the catalyst, in my opinion, was the DeFi network, right? Decentralized finance tokens were being introduced. And like I said before, people were very excited about this new use case of technology. So having that in mind, let's talk about the future of crypto, right? It is so young, and there have only been 2 different market cycles so far, right? In the near future, even if the cryptocurrency market falls, there will always be another market cycle, right? We are still so young. There will be another catalyst event which gets people excited about cryptocurrency, which will cause the entire market to pump again, right? So it's so important to understand the bigger picture of the cryptocurrency market in order to determine whether or not you should be more conservative in your trades or be more risky with your positions, right? If you were in a bull market cycle, you would be willing to take more risk for more potential profits. If you're in a bear market, you wouldn't be as inclined to take riskier trades. Hey, so if you're seeing this, you either skipped through the entire course or you finally finished the course. I appreciate you guys for completing the course. If you want to support me, please feel free to like and subscribe to my videos. Then I would be able to keep creating content for you guys. Peace out.